zero by 2040. Obviously, we'll need new technologies by 2040, but we are on track with 40% of our customers' energy coming from renewable sources today.
And with that technology transition, is that developed in-house? Or are you licensing it from startups, or kind of how does that play out?
It really comes from a variety of sources. First, legacy hydro. Then we take solar and wind, battery storage. We have the second largest installation of battery storage outside of California taking place right now. And we use a lot of technologies to integrate all of those renewables for safe, reliable, affordable, clean energy for our customers.
Hey, Maria, just how vulnerable is your utility to droughts? You mentioned hydro power and even wildfires with the transmission lines.
You know, it's something that a lot of people ask. We're in actually a drought period right now in the Pacific Northwest, and we've actually been relying a lot more on energy from markets outside of this region. Much of that is renewable solar and other sources that come into this area, but also being able to construct new wind resources, new solar resources is augmenting our legacy hydro. As we look going forward, we will need ever-increasing amounts of renewable energy, which are today price competitive with other sources.
And how much does that cost? What's your CapEx looking like to make some of these investments?
You know, we have taken our investment up over time, and in the last 3 years, our invested asset base has actually grown about 30%. Overall, our revenues are also up about 37%. As we see customer growth, we have 5% more customers today than we did 3 years ago, and they're using 10% more energy.
In terms of the total return opportunity for this stock based on the earnings per share, I mean, you guys have been beaten up to some extent because of worries over the things that we mentioned. Where do you head from? What's your message to investors at this point?
You know, we're committed to growing at 5 to 7%. We've been leaders actually in addressing wildfire. While one can never predict what will happen, we've invested tremendously in reducing those risks, and again, are committed to the 5% earnings growth trajectory.
And when you look at expectations for 2024 and even beyond, looking at some of the energy transition mission or goals that you guys have in the state of Oregon and really broadly around the world has laid out, how does 2024 look for your business?
You know, 2024 looks really good. We actually will see revenues probably about 14 to 15% higher year on year as we turn into 2024. I'd also say that we're focused on meeting our customers' needs, whereas the largest semiconductors and global manufacturers to small startups and over 2 million residential customers who are focused on the clean energy transformation and ensuring that we do so with a smart integrated grid.
Yeah, as we make that transition, I mean, overall, the grids in the United States, are they prepared for all this? And what sort of infrastructure upgrades do they need? And, you know, are you getting any help from the Biden administration on that front?
So we've been investing in grid technologies as well as infrastructure for a long time. We're the 4th largest electric vehicle market as an example, and have been thinking about those new technologies for years. From the Biden administration, we're very fortunate to have received several very significant grants. One in particular around technology is a partnership with NVIDIA and the startup Utilidata. The 3 of us coming together and bringing our unique capabilities to deliver for customers, to grow earnings, and to ensure really a solid clean energy future that is attainable in a very short period of time.
That sounds like the intersection of artificial intelligence.
Yeah, bringing in AI to everything. Well, I guess this is my question, Maria. We've been talking about this transition, and we've seen some things happen. I guess, are you surprised with where we are going into 2024 with how quickly or slowly things have evolved? And do you expect that to kind of pick up in the coming years?
You know, it's interesting. We're very optimistic about the future. I mean, when we come together in partnership, we're able to do great things. And the acceleration of clean energy has been remarkable, not only for our company, but across the entire United States and really globally. But we'll see coming out of COP, there's no question that this will continue to accelerate, and that we'll work together on new technologies. One of the other grants that we received was part of the Northwest Hydrogen Hub, $1 billion to invest in hydrogen. And then we also have received $250 million on a consortium with the Confederated Tribes of the Warm Springs, where we have worked together with them, co-owning a 450 megawatt facility, hydropower, that we will now be able to increase the transmission with a $250 million grant, enabling further renewable energy development on the reservation for the benefit of the future employment of the tribes, as well as renewable energy across the state.
Is climate change the far and away the biggest risk or that you face in the future?
Oh, I think we were facing a lot of risk as we go through a transformation. Clearly, we're using technologies. We're changing at a pace that is unusual for utilities, but very exciting. And so as we manage everything from a changing and warming climate to changing expectations by customers to new technologies, and what is managing risks is also managing opportunities.
Maria, pleasure. Thanks for stopping by. Appreciate it. Maria Pulp, the CEO of Portland General Electric, the ticker symbol POR. And as I look at it right now, among the analysts, 7 buys, 5 holds, and 0 sells. The average price target for this stock, according to data compiled by Bloomberg, $48 per share.
Just recently got upgraded this week over at Barclays, talking about the upside. And despite it being a wildfire stock, they kind of point out that we're exiting wildfire season, and as someone who spent the first 18 years of my life in California, wildfire season is a thing. Yeah,
it's a big deal. Bailey Lipschultz, John Tucker with you in for Paul and Matt. S&P right now, S&P 500, unchanged, 4720. The Dow Jones Industrial Average 30 points lower after another record close yesterday, 37,218. The NASDAQ 100 points higher, up 0.6. This is Bloomberg. And time now for a look at company news. And for that, here's Lisa Mateo.
Thanks, John. Citigroup is shutting down its municipal business. It's one of the most dramatic moves yet by CEO Jane Fraser. We get more from Bloomberg's Sally Bakewell.
We knew that they had been weighing this decision, which is really still quite a shocking one, even though we did have some sense that this was to come, because Citi was an absolute powerhouse in this $4 trillion market for U.S. state and for local debt. It helped on deals for some very prominent buildings and landmarks, such as the World Trade Center rebuilding.
Citi right now down nearly 1%. General Motors is cutting more than 1,300 hourly jobs at a pair of plants in Michigan. It comes less than a month after a new labor contract was ratified by its unionized workers. Bloomberg's Ed Ludlow has details.
The majority of the 1,300 are at the Lake Orion plant, about 945 jobs. That's significant because it was where they've been building the Chevy Bolt, which, as you know, will be discontinued, and where they had delayed plans or pushed back plans to build electric pickup trucks there. That will now take place starting in 2025.
And a plant in Lansing, Michigan will also be affected. GM right now, they're down more than 1%. And the union representing Southwest Airlines flight attendants have called for a new vote on a contract offer it rejected last week. It comes after its voting service provider, TrueBell, said there had been a data leak. Southwest right now is down about 1.5%. And Chevron CFO ordering its staff to do better after missing its 2023 goals. In an email to staff seen by Bloomberg, Pierre Breber said, "We've delivered industry-leading performance before, and we will do it again." Those are the company stories we're following. I'm Lisa Mateo. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
And I'm John Tucker, along with Bailey Lipschultz, in for, who are we in for again?
Matt
Paul
Miller
and Matt.
Paul Sweeney.
God knows where they are. But anyway, it's Friday, so they've got the day off. Right now, time for a look at world and national news. And for that, let's head down to Washington right now. And Amy Morris. Amy.
All right, thank you, John. The European Union's plan for additional aid for Ukraine hit a snag. Hungary is the lone holdout. Bloomberg's Zoltan Shimon in Budapest explains why Prime Minister Viktor Orban opposes the package.
His rationale is that the EU is still blocking 2/3 of the aid of funding earmarked for Hungary. That's been suspended on rule of law concerns. And he says if Ukraine is going to get money from that budget, then Hungary should get all of it as well.
Bloomberg's Zoltan Shimon reporting earlier, Ukraine actually scored a big political victory when the EU unexpectedly agreed to open membership talks. Joining the EU would solidify Ukraine's orientation toward the West. Astronauts from next year's Artemis 2 mission met with President Biden at the White House. The crew of 4 preparing now for a scheduled November launch to return to the moon. Canadian Space Agency mission specialist Victor Glover says Artemis 2 is an important international collaboration.
The president talked about opportunity, about the challenges the world faces. They're much bigger than just Artemis, but Artemis will be an example of the extraordinary things we can do.
Artemis 2 is an 8-day mission, sending 3 NASA astronauts and 1 Canadian Space Agency astronaut around the moon. It would be a last test flight before Artemis 3 lands a crew on the lunar surface. That would be in 2025. The holiday travel season is about to kick into high gear, kind of already has. The Transportation Security Administration says it's ready, and so are the airlines. Southwest Airlines CEO Bob Jordan says this year's changes are already proving successful.
Thanksgiving Day, there was snow, 97% on time, 0 cancels across our entire system.
Bad weather set off a cascade of problems last year for Southwest and other airlines. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. John and Bailey.
All right. Amy, thanks very much. Appreciate it.
Yeah, it's an interesting time, John, on Wall Street, but also in the UK. I don't know if you're a fan of The Crown on Netflix, the second half of
Everything
season 6
I know
came out.
about the royal family, I learned from Netflix,
Oh.
which is actually, I think, pretty historically accurate.
That's what my understanding is. I'm a big fan of The Crown, though I acknowledge that I think that we can't say with certainty any of these actual interactions really did happen between the family, but nonetheless.
I'm going to say yes.
But anyway, so in the news, in the shows, in the latest 2 seasons, though, is Prince Harry. And Prince Harry now in the news again, a judge ruling and awarding Prince Harry £140,000, that's the equivalent to just under $180,000, in a phone hacking lawsuit against the publishers of the Daily Mirror, marking a victory for the royal who has consistently refused to settle long-standing claims. Unlawful information gathering, according to the judge, was widespread and habitual between 2006 and 2011.
And is this going to change the behavior of the offenders? I think not.
They make a lot of money off of that.
They make even more than what the fine
$180,000
is. A drop in the bucket. And you'll recall from watching Netflix, The Crown, that it was King Charles and Camilla when they started their sultry affair. That somebody,
accidentally, I thought it was an accidentally caught over the phone.
Well, okay.
Phone airwaves or something like that.
This is a guy who had police scanners as one of those bugs and overheard this conversation. And somebody finally figured out that, it was Charles and Camilla.
And the interesting thing, though, is looking through some of the comments, phone hacking remained an important tool of the kind of journalism that was being practiced, which I guess if you're a tabloid, that kind of your opportunities are either talking to people in the circle who want to give you the inside scoop, or you can do what apparently the Daily Mirror did and just go straight to the source.
Yeah, well, it's, they're no friend of the tabloids or journalists or whatever you want to call them who pursue the royal family like that. I mean, taking into account what happened to his mother.
Yeah, exactly. And the judge saying 15 of 33 articles presented were a product of phone hacking or other unlawful information gathering.
You are listening to Bloomberg. More Markets starts right now.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
And I'm John Tucker along with Bailey Lipschultz. This is Bloomberg Markets. Paul and Matt enjoying a well-deserved break and filling in for them today. Bailey, along with me. This recent rally has a name, as we pointed out the last hour. We're calling it the Ricardo Rally. You'll have to figure that one out. Anyway, let's get the update. Right now, stocks in the green. Not a lot of movement with our Bloomberg Business Flash. Let's check in with Nathan Hager. Hi, Nate.
It is still just a snapshot in time, but like you say, John, stocks are trying to hold on to just a little bit of a gain at the moment. Investors who might have been thinking earlier this week that Chairman Powell signaled a pivot got a bit of a head fake this morning from New York Fed President John Williams saying it's premature to be thinking about a March rate cut. But even before those comments, Sophie Lund-Yates, lead equity analyst at Hargreaves Lansdowne, was telling us she's not convinced this is a pivot, and she's advising investors to focus on quality.
By that, I'm talking about your more old-fashioned names, potentially, names with really big brand moats where they've got a bit more reliability over revenue. This obviously spans a lot of different sectors. There's a big consumer conglomerates that account into this. You've got aerospace and defense that have got order books. They know what's coming down the pipe.
And you can hear more from Sophie Lund-Yates of Hargreaves Lansdowne on the Bloomberg Surveillance podcast. Along with the Fed speak, investors are contending with some potential volatility with options and futures expiry, the biggest one of the year so far. But right now, stocks are moving just a touch higher. We check the markets all day long here on Bloomberg. Right now, the S&P 500 is up 4 points. That's a gain of 1/10%. Dow is little changed, up 12 points. The NASDAQ up 0.5% right now, up 76 points. 10-year Treasuries up 2/30 seconds. The yield 3.91%. 2 years at 4.40. NYMEX crude's down 0.5% at 71.19 per barrel. COMEX gold is up 0.2%. 20.4930 per ounce. The euro 1.0915 against the dollar. So some euro weakness this late morning. The yen, 141.77. Looking back at stocks, 6 of the 11 main industry groups in the S&P are in the green right now. Information technology, the biggest leader. Utilities and healthcare, the biggest drags on the S&P right now. That's a Bloomberg Business Flash, and Bloomberg Markets continues with John Tucker and Bailey Lipschultz.
All right, Nate, thanks a lot. And I'm John Tucker, along with Bailey. Thanks for being with us on this Friday. Let's get a look under the hood, as they say. And for that, our markets reporter, Abigail Doolittle, back with us in studio. What you looking at?
So we're still looking at mixed markets on this Friday. We're still looking at above average volume because of the triple witching and reconstitution of both the S&P 500 and the NASDAQ 100. But I would say that we're a little bit more anchored toward the green. Only the SPW or the equal weighted S&P 500 is down slightly. The rest of the indexes on my board, actually the BKX or the KBW Bank Index, it's down about 0.3%, but very, very small declines. So I would say, for better or worse, and it's funny, in my Twitter feed, I have a lot of people not using profane names against some of the Fed officials, but, one person calling, saying that they're, actually, I don't want to repeat it, but basically saying that they're not fans of this back and forth Fed talk. So, of course, right now, given the fact that Powell pivoted from his stance earlier this month of higher for longer, and then Williams today saying, whoa, not so fast. We now basically have stocks where they were before. So again, the Fed has learned that if they do in fact need to cool the market off, they're going to have to do a lot more than just say Williams. It will have to be a number of governors, or it will have to be Powell again. And this is important information. The markets could do it themselves in terms of inflation data, and we do still have PCE for the month of November ahead, but net, not a lot of action today, but beneath the surface, tons of volume.
Yeah, well, I guess a question on triple witching. I have in the past referred to it as like you have a big sandwich and you put just a little hot sauce on it, so it doesn't really change the actual sandwich. JT's giving me a weird look. But what
Yeah,
actually...
I know. I'm not sure.
Does triple witching actually matter? Like, at the end of the day?
Well, I think that it does. You know, so it's...
Oh, wait. You're given that, you're going to have to explain what it is. It's the expiration of options. That money's sitting there, and then it's got to go somewhere.
Yeah, there's stock options, index options, and then futures options. And it used to be quadruple witching. I forget which other one kind of went away. But it's a lot of different securities. Basically, it's a lot of money changing hands. I don't know if this particular one will prove to, but for instance, one that was very, very significant was the one in March of 2020. The volumes were off the charts. And if you recall, that Friday, that Monday, and maybe that Tuesday, that was the bottom of that pandemic selling, and then it led to a monster rally. And it was that clearing of the decks. At least this is what some of the folks that tell me. Chris Murphy over at Susquehanna, head of derivatives, comes to mind. Kevin Kelly. They both saw that as a big one. I don't know if this one is going to be significant in that way, a clearing of the decks. Although I will say somebody was just either today or yesterday had communicated to me the idea that volatility is actually going to increase next week as a result of this triple witching. And actually, it's our own Greg Bender. Bear with me just 1 minute. I'm just trying to find this message from him.
While you're looking for that message, I'm looking at the volumes. It is a high volume trading day.
Well, I guess that's what, as someone who gets paid to watch the lines of the stock market, it feels like we point out the volume and we talk about triple and quad witching all the time. But other than wonky moves in the final 45 minutes of the day, I personally feel like it doesn't end up.
Well, I mean, a couple of these, I don't know enough to really take a strong stand one way or the other, but what I can share is what real experts, I mean, Chris Murphy, he's phenomenal, Kevin Kelly, phenomenal also, and particular triple witching days, that one in March of 2020, massive event. I mean, the way that they put it is it, again, clears the deck and can, in that case, allowed for the buyers to step in. So here I'm looking at a $5 trillion option expiry looms as the S&P 500 eyes an all-time high. The big index options positions have been pinning the market down, noting that traders will be buying and selling new positions next week after the expiry. This particular person is saying, and I'm not sure what desk he's from, is saying that volatility is going to increase a lot from now until the end of the year. What makes that interesting, we think about the next 2 weeks, or at least I do, as sort of a sleepy time. 2018 was a little bit of an exception, although it's funny because that led right into the first Powell pivot. So this makes it sound as though this could actually be one of the triple witching that we might know after the fact could prove to be one of those clearing the decks.
All right. Thanks very much. Appreciate it. You didn't really give me an explanation, though.
Of triple witching?
Well, what about the sandwich and the hot sauce? What about mayonnaise?
That was like a metaphor.
Mayonnaise, spicy brown golden mustard.
There is mayonnaise on it. I'm saying when you add the hot sauce to the sandwich.
And what's the analogy to options?
It makes it a little more spicy and there's more there's more going on, but it doesn't actually really change the structure of the
so now that you've explained that to me, because I wasn't picking up on it quite.
I walked Critty through it and she was like, I like that analogy. So then I kept it, but then I realize now I need to explain.
Yeah, I would probably more think about like hot fudge on a Sunday. So yes, every now and then the triple witching can turn out to be hot sauce or hot fudge.
Abigail Doolittle, our markets reporter. Thanks very much.
She's
Let's
not
switch.
Eating sugar.
Oh, please.
That's why I'm thinking of hot fudge.
Let's switch to fixed income right now. Alex Patron, our next guest, the director of fixed income at Rockefeller Asset Management. I missed out on 5%, but is what are we looking at? 441 or 392 right now on the 10. Are those screaming buys?
I mean, 392 is the new 5%, right? Isn't that how we shift? And if you want spicy and not sleepy into the end of the year, that is what we have right now, quite clearly. Rates driving the market, the Fed, FOMC, Jay Powell, Williams, happy to unpack that, making it fun for us into year end.
With all that speak and Williams today, I mean, how do you set strategy with all these different narratives out there?
Yeah, absolutely. Great question. I mean, we are long-term investors. We have said for quite some time as we think about what was driving markets in 2023, it was the rate story, driving munis, driving corporates. In 2024, that is going to be no different from here. The message is quite clear this week from the Fed, even with Williams today. Williams came in and tried to walk back some of this dovish interpretation of what was a dovish meeting. 3 cuts instead of 2. Many people were caught off guard by that. The view from
he was walking it back at the instructions of Mr. Powell.
He was walking
Or
it
he's
back
like
at
a
the
loose
instructions
cannon.
of someone, or he's a loose cannon. Whether that is the case is not for us to necessarily try to decide. But if you unpack what Williams said, is he said that we are not talking about cuts right now. That doesn't mean that they're not talking about cuts. So when you look at the summary of economic projections, the dot plot, what does it tell us? It tells us 3 cuts. It doesn't tell us when. And so the market feels like it got a little bit ahead of itself, pricing in 6, some people calling for March, some people calling for June. What the Fed is telling us is they are comfortable with this level of employment.
But how independent will the Fed be in an election year, in a year where there's expectations that looking at the work?
Oh, is that fantasy? I mean,
well, listen, we are here to think about market volatility, relative value. I can have many cocktail discussions around the independence of the Fed. That is a fun topic to really go down a rabbit hole, or maybe Abigail mentioned Twitter. I'm sure there's plenty of things there. Our goal simply is, to your point, John, 392, relative value or not, fair valued. And what we start to look at is where do we see the trend line over the next 3 months, 6 months, 12 months across the rates market? And then most importantly, how is that going to impact the municipal market on a go-forward basis?
how is it going to impact the municipal market on a go-forward basis?
Thank you for letting me continue that. I think from our perspective, it's quite simple. Ratios continue to matter here. With this move lower in rates, you have a tremendous amount of demand that's come back into the market. So we look at rates, we look at technicals, supply and demand. Supply driven by new issuers stepping into the market, supply driven by whether retail is a net buyer, net seller. Retail has stepped back in, they're a net buyer.
Tangential to that, can I just ask you quick, with the Citigroup story dropping their municipal department, how loony is the municipal market getting when you take into context the whole Ken Paxton Texas thing?
Another key risk factor that we really think about is liquidity dynamics in the municipal market. What you've seen since my early days, pre-GFC till now, is this consolidation of desks across the street. When we look at that, as the dealer community shrinks, it is a really unfortunate thing for the muni market, for investors. Liquidity dynamics change. There is more friction in those periods of mentioning technicals where there are outflow cycles and you have fewer people stepping in to provide liquidity. It can create some more challenges for those who need liquidity. It can create a lot more opportunities for those who are looking to be the source of liquidity. So while we don't like to see it, it's looking through that and really emphasizing managing the liquidity side
For
of the
a
market.
new homeowner like Bailey, that's just like probably means his taxes are going to go up at some point. I mean, it's right. If you're having trouble doing these deals or having an underwriter and the market is impacted that way, ultimately it's going to be more expensive, I guess.
You know, let's make no mistake. If you look at the market yesterday, you have issuers that are able to bring deals. Illinois toll, example yesterday, 15 to 20 times oversubscribed. Spreads were half of what they were back in April when they brought a deal. You will still see deals being brought. I expect issuance picks up materially heading into next year, both in terms of corporate risk as well as muni risk, because guess what? The Fed has just made it a much better entry point. These deals will get done. It will just continue to be consolidated from here.
Well, how quickly does the Fed need to cut for some of those deals to come to market, or does that not matter as much?
Well, they're coming now,
Yeah.
right? We're seeing it. We're seeing deals that are added to the calendar. Abigail was talking about a sleepy week. We in the municipal market, we hope that next week we can catch up on all the work that we didn't necessarily do. You know, maybe trade on the margins. There are deals that are stepping in that weren't on the calendar.
What areas in particular?
It's really across the board. We're seeing healthcare, we're seeing general obligation risk. It is deals that were tagged to come at some point, likely in the first quarter, first half of next year, and they're saying, let's do it today based on what we're seeing at the moment. So regardless of, even prior to the FOMC, call it pivot towards a softer tone, we expected that issuance was going to pick up in 2024, somewhere to the tune of $450 billion or so.
I'm not exaggerating when I say this, but I get in the mail now at least it seems like once a month, a letter from, I don't know, some firm saying, you know, we represent, well, in my instance, my healthcare provider, Robert Wood Johnson Hospital, saying, you know, they've been hacked. We don't think your personal information, but we're not sure. In the meantime, you should really monitor your credit. Well, no kidding. Is that, let's talk about cybersecurity risk, where it figures into your business and how important it is.
Yeah, when we think about risks that are forming in the municipal market, we think near-term risks, so balance sheet pressures, rising costs, declining revenues, all of those things you're seeing. But then we think longer term as well. Cybersecurity risk is one that is on our radar. No different than companies that are facing these same pressures. And so we like to look towards our municipalities taking the necessary steps today to really protect data integrity, financial systems. Scary stuff, John. Ransom. You don't want to think about that when it comes to muni credit. We agree they are not. It's a question of as these things, we don't agree that they are not. Many are. But it's looking through to ensure that issuers are taking the necessary steps today, just as companies are doing the same.
And how is, in looking through some of the notes, climate risk? We were talking to the CEO of Portland General Electric earlier about some of the green transition. You look at places like Florida and California where insurance companies are just leaving. So how does that factor into the market?
You know, it's wild. It's something that we've talked about quite a bit on the desk. And as we think through bigger picture, longer term, the frequency of events, the intensity of events, they're going to get bigger, they're going to get larger. It is going to put pressure on balance sheets. So it's both some of the costs associated with rebuilding. State and local governments will need to issue more debt, both to shore up infrastructure, water resiliency, rebuild, but also bigger picture long-term, what's the biggest risk for munis? Out-migration, right? Look at Detroit. Think of some of those examples. And so as you think through it, I think the average individual buying a home is not really thinking through the climate risk. Long-term, big picture areas like Florida, at some point people will. And when that happens...
Well, they're going to think about it when they go there and they can't get insurance, homeowners insurance, for instance. That's happening everywhere, not just Florida.
And that's not always the case. A lot of times when people really think about it, and there was a lot published on this topic earlier this year around insurance, it's when the event happens to them. So it's a little bit of hindsight.
Alex, that was great. I hope we didn't get too far afield of your...
No, this is fantastic. Lively Friday.
Alex Patron, the Director of Fixed Income at Rockefeller Asset Management. As we look at markets right now, S&P 500 dead flat, 4720 on the index. The Dow only 4 points higher, 37,252. So that's still a record, anything in the green. NASDAQ 100 right now, 94 points higher. That is up 0.6%. That 2-year, 440, 1 basis point higher, 391 on the 10. That's pretty much flat. This is Bloomberg. And right now, let's get some company news. And for that, here's Lisa Mateo. Hey, Lisa.
You got it, Don. H&M is losing its sales growth momentum. The retailer's revenue fell 4% in the fourth quarter at constant currencies. Bloomberg's Dasha Afanasieva explains why.
So it's a combination of both a weaker consumer, that's something that's arguably seen in the sector because of the cost of living squeeze, and also increased competition from labels like Shein, which is going to IPO soon.
Now, that slowdown is putting the pressure on H&M to cut prices in order to clear its inventory. H&M right now, they are up about 0.5%. To the home builders now, where Lennar shares are under pressure. It's due to weaker gross margins on home sales. Bloomberg's Katie Greifeld says there are a few bright spots.
In the fourth quarter, Lennar beat on EPS, revenue, and net new orders. And looking ahead, its forecast for first quarter and 2024 deliveries came in above analyst expectations. But if there was something to pick at, it comes on the gross margin numbers. In the fourth quarter, gross margin on home sales was about 24.2%. That is a hair light. And in the first quarter, Lennar sees gross margin on home sales between 21 to 21.3%.
Well, when I went into the story, shares were down. Now they're up about 3 times. 0.4%. In tech, Apple's Google will stop telling police which users were near a crime. The company is changing its Maps tool so it no longer has access to users' location histories and blocking law enforcement from being able to demand that information from Google. That feature, which Google says is off by default, helps users remember where they've been. Alphabet shares are up just a fraction. Those are the stories we're following. I'm Lisa Mateo. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Going up to 11:22 on Wall Street, I'm Nathan Hager. We check the markets all day long here on Bloomberg. Right now, markets as a whole are kind of looking for a little bit of direction, but tech shares are outperforming. Right now, the S&P is little change to the upside. The Dow is down 11 points. The NASDAQ is up 62. That's a gain of 0.4%. 10-year Treasury is up 1/32. The yield 3.91%. The 2-year yield is at 4.40. We're also keeping an eye on the 30-year. It's been flirting with a 4 handle right now at 4.02%. NYMEX crude's down 0.4% at $71.31 per barrel. COMEX gold is up 0.2%, $20.49 even for an ounce of gold. Euro 1.0912 against the dollar. British pound 1.2694. The yen is at 141.76. That's a Bloomberg Business Flash. Bloomberg Markets continues with John Tucker and Bailey Lipschultz.
All right, thanks, Nate. Appreciate it. And once again, this the market not going anywhere as far as equities go.
I just want to go ahead and say the S&P on track for an 8th week in the green, the longest winning streak since.
Well, it's 1 point higher. So.
Well, no, but on the weekly basis, you got to look at your different size and scopes. Best weekly winning streak or longest weekly winning streak on the S&P since 2017.
What'd you say, 8 weeks now?
8 weeks.
All right. Let's switch to fixed income once again. If you missed out on 5%, well, help's on the way. Nick Venditti is Senior Fixed Income Portfolio Manager, joining us from Allspring Global Investments. Syracuse grad?
Syracuse.
Maybe you should ask him the first question.
Well, first question then, Nick, looking at Syracuse, because you were there 2004 to 07, so you just missed the Mello national title and I think a really good football team. I don't know if you're a big sports guy.
I did miss the Mello national title, unfortunately, but there were still some pretty good teams during my tenure.
Yeah, fun times. I had 2 Final Four runs my freshman and senior year. I drove to Chicago in a Prius with 5 other people, John.
That's a story for another day. So, Nick, 5% come and gone. Is it coming back? Are there opportunities out there?
Yeah, 5's probably not coming back, but I do think we'll go back above 4 on the 10-year. before it's all said and done. I think the question you have to ask yourself isn't just about opportunities today, but opportunities over the long term. And the reality is, even though maybe you missed the peak in interest rates are still substantially higher than they were just a couple of years ago. And so from a pure opportunistic standpoint, I think fixed income still looks attractive as part of an asset allocation.
And how are you looking at those expectations for 24 at a market that right now is pricing in just north of 5 cuts?
Yeah, 5 seems pretty aggressive to me. Look, I know you were talking about triple witching earlier, and whether it's witches or trolls.
Did you like Bailey's explanation? What was it, a ham sandwich?
Sandwich is fantastic, right? But whatever monster sort of haunts your dreams, if you're an investor, the only monster you should be worried about are Federal Reserve board members, right? They are moving the market more aggressively than anything. I think Powell probably went too far with his comments. They're already trying to walk them back like 10 minutes later. So ultimately, I think the reality is we're going to continue to see volatility in markets. And what that means for people who sit in chairs that look like mine is you have to attack the markets on days that feel terrible and kind of be content to sit on your hands on days where the screen is so bright green you have to wear sunglasses.
All right, this is an unfair question, but since you mentioned part of your asset allocation, 60-40, is that still a thing?
Yeah, look, I got asked this question a lot a couple of years ago, so often when rates were zero, because no one wanted to own fixed income, and that hurt my feelings. I'm a delicate flower, for sure. Look, today that's not the case, right? There is a solid argument to have 40% of your allocation in fixed income. If you are a top taxpayer, I mean, we can still generate yields sort of in the 3.5 range, and at a 40% tax rate, that gets you up close to 6 on an after-tax basis. What do you expect your equity portfolios to do over the coming 12 to 18 months? On a risk-reward basis, fixed income still looks like a home run.
Okay, so that, what is it, triple tax-free with the munis? I don't know, how do you make that selection, and what's the proper vehicle to do that? ETFs maybe with munis?
Yeah, not ETFs.
Why not?
Look, I think a couple of reasons.
Because that's not your business.
That's not what I do, right? So
okay,
yeah, no,
sorry.
First and foremost. But look, I think fundamentally ETFs are less successful in fixed income markets by virtue of the fact that they tend to buy the biggest issuers, which means they buy the things with the most debt, which might not be a sound investment strategy. In addition to that, look, munis in particular are not the most liquid of assets. You mentioned Citi and the news that broke yesterday. Liquidity is at a premium, and just because you put a liquid wrapper over an illiquid asset class doesn't mean you automatically get liquidity. And ultimately, I think there are better avenues for investors to attack fixed income markets, to attack the muni market than an ETF.
What are those avenues?
Look, I think a couple of things. The sort of dinosaur 40 Act mutual funds are still kind of where the most active management exists in muni fixed income. But outside of that, muni SMAs for retail investors are becoming more and more popular and have been over the last 5 years or so. And I think it gives investors a low cost, pretty easy ability to access a market that's difficult to access in other ways.
And we were just talking with our last guest about some of the risks around credit, around municipal bonds, climate one, as well as cybersecurity. Are those two of the things that are top of mind when you're analyzing where to put money to work, or what other areas of could offer potential risks?
Sure, but those things are hard, right? I am a fixed income portfolio manager. It's pretty difficult to project when the next hurricane is going to hit and how much damage that will cause. But what we can do is kind of figure out where they're going to hit and ultimately what impact that's going to have. Cybersecurity is even more difficult because, look, the reality is that muni issuers are years behind where they need to be from a cybersecurity perspective. And so you're thinking about things like how much insurance do they have in order to pay a claim if and when the worst were to happen. Ultimately, I think right now, for the next 12, 18, 24 months, the foreseeable future, The more important things are kind of the fundamental things. What are the strengths of the income statement? What are the strengths of the balance sheet? How reliant is this credit on commercial real estate, for example? Those types of things are likely going to drive credit differentials in the coming year.
So as I come into your office as a potential new client, the first question you put to me is what, where I live?
Sure. I mean, look, that can be relevant depending on your marginal tax rate and your need to invest in a state-specific strategy. But really, national munis offer a pretty good value for anyone outside of the highest tax states. The cool thing about the municipal bond market is that it's much bigger than the equity market from a number of names perspective. Much smaller dollars, but names, it's huge. There are 60,000 municipal issuers, which allows pretty excellent security selection. So ultimately, as I'm talking to you or any potential client that comes to Allspring, what I'm asking is, what is your tax rate? What are your risk tolerances? Are there anything that scares you about the municipal market? Lots of people are scared with Illinois or California or those types of things, but ultimately, I'll be able to find pretty good value across a huge swimming pool.
Well, who is in danger of defaulting? I mean, just broadly out there in the U.S.
Yeah, look, most of the traditional munis, the things that people think of when they think of municipal finance, are not in danger of defaulting. The defaults that may show up in 2024 are really isolated to a couple of sectors, right? They are in the continuing care, retirement centers, skilled nursing facilities. Those are below investment grade or very low investment grade risk. Or over the past 5-7 years or so, as interest rates went to zero and people were hungry for yield anywhere they could get it, there was a proliferation of municipal bond deals that were project finance, right? There's a project in California that turns rice husks into IKEA furniture, one in Arizona that turns mine tailings into Miracle-Gro to grow marijuana in Colorado, one in Indiana that turns plastic bottles into diesel fuel and handle wax, something for everyone. Those are all fascinating stories, but they were all venture-like capital risk at muni-like returns. And that's a bad deal for investors. And as we go into an economic slowdown, I think some of those very high-risk project finance deals are going to find themselves in trouble.
Nick, thanks. That was great. I appreciate it.
Absolutely.
Nick,
Thank you both.
Sure. Nick Venditti from Syracuse. What year did he say?
I think 07. Masters in finance, though. I was there for undergrad, different times, and about a decade later.
Didn't have to mention that. Nick is the senior fixed income portfolio manager, Allspring Global Investments, joining us from Zoom today. And as we look at the markets, S&P 500, 5 points higher. That's up 0.1%. 47.24 on the index. The Dow remains in record territory, 34 points higher. That's up 0.1%. 37,282 on the index. The Nasdaq 100. That is up 130 points right now. The tech-heavy NASDAQ 100 up 0.8%. And right now, let's head to Washington and get an update on world and national news. And for that, once again, here's Amy Morris.
All right, thank you, John. President Biden is urging Israel to be more cautious in its war with Hamas. We get an update from Bloomberg's Ed Baxter.
A bit of a change from the message he's delivered for the last week. NSC spokesman John Kirby says keywords are lower intensity.
Possible transitioning from what we would call high intensity operations, which is what we're seeing them do now, to lower intensity operations sometime in the near future.
Meaning more surgical operations aimed at Hamas leaders rather than the current force. Biden says the focus should be getting Hamas, but also saving civilian lives. I'm Ed Baxter, Bloomberg Radio.
Now, National Security Advisor Jake Sullivan is in Israel meeting with officials about the mounting death toll in Gaza. Sullivan says they've discussed a timetable for scaling back intense combat operations in the war with Hamas. Sullivan also met with Palestinian President Mahmoud Abbas about Gaza's post-war future. Now, the debate over stalled Ukraine aid and tougher border security means the Senate is going to have to delay its holiday plans. Bloomberg government Zach Cohen reports from Washington.
Time is running short, and the House being on recess makes it difficult, obviously, to get that measure to the president's desk in the next 3 or 4 weeks. but we could see the Senate pass something as soon as next week if there's a miraculous agreement on what has been some of the more difficult issues for Congress to process over the last couple of decades.
So the Senate's going to be working, or at least Senate leaders are going to be working through the weekend, and then the Senate's back in session on Monday. That's Bloomberg Government's Zach Cohen in the nation's capital. The Senate has approved back pay for senior military officers who all had their promotions held up for months by Republican Senator Tommy Tuberville of Alabama. The bill passed the Senate unanimously. It still needs House approval when lawmakers return from their holiday break. Tuberville held up promotions for 10 months in protest of a Defense Department policy allowing service members travel reimbursement for abortion care. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. I'm Nathan Hager, and we check the markets all day long on Bloomberg. We'll call it light green on the screen. Equities showing some modest gains, with tech leading the way at the moment. S&P 500 is little change to the upside. The Dow is up 14 points. That's also little change, but the NASDAQ is holding on to almost a 0.5% gain, up 67 points. 5 of the 11 main industry groups in the S&P are in the green, led highest by information technology. That sector's up 1%. Utilities and real estate are the biggest drags in this mixed S&P. So still trying to hold on, even after New York Fed President John Williams told investors it's a little premature to start thinking about rate cuts in March. David Lefkowitz, head of U.S. equities at UBS Global Wealth, says, though, the soft landing is getting baked into this market.
If people still have jobs, then the U.S. market should be reasonably well supported. And now we have the very high likelihood that the Fed is going to be cutting rates at some point in 2024. So there's enough economic momentum right now, I think, to carry us through. And then as the Fed starts cutting rates, that'll provide some additional tailwinds.
And looking at treasuries right now, the yields are dropping just a bit. 10 years up 3/32 for a yield of 3.90%. The 2-year at 4.40. The 30-year 4.01, almost 4.02%. NYMEX crude is down 0.5% at $71.25 per barrel. COMEX gold is up 0.2% at $20.4840 per ounce. The euro 1.0907 against the dollar. The yen at 141.77. Check Bitcoin, that's down 2.5%, right around 42,000. That's a Bloomberg Business Flash. Bloomberg Markets continues with John Tucker and Bailey Lipschultz.
Nathan Hager, thanks a lot. And with all that data as a backdrop, let's bring in our next guest. Omar Aguilar is the CEO and Chief Investment Officer at Schwab Asset Management, joining us from San Francisco. You know, Omar, Fed Schmed, at the end of the day, it's all about how much money a company is making. And with lowered expectations for earnings for 2024, I wonder, from your perspective, how much can we see in terms of upward surprises, and is any of that priced in right now into markets?
Yeah, well, great question. I think, conditions have clearly shifted going into the end of the year. I think, market participants seem to be aggressively, cheering on decisions for central banks for, the policy rates and the end of the tightening cycle across the board. That doesn't necessarily mean that the tightening cycle is over, because, at the same time that they may not increase the rates anymore, they're still reducing their balance sheet. So, we're still seeing some of that events going in through the first part of next year before they start potentially cutting rates. What that means in terms of profitability and earnings expectations is that we probably saw, the worst in terms of the softening of earnings going in through the last 2 quarters, and then the potential for increased revenue, the potential for, increased profitability continues to be for probably the second quarter of next year, and potentially for there. A lot of that will depend on the labor market, and a lot of that will depend on, consistent consumer spending that has been the trend so far in 2023.
But is that priced in right now or not?
Yes, I think a lot of what the optimism, I think the market is now thinking of, at least 150 basis points on rate cuts. And that comes in with an optimism that, yes, labor market will stay, strong, and consumers will maybe slow down, but not, gonna just default as people thought, earlier this year.
And Omar, as we look at this rally, though, to John's point, we're trading at or near record highs pretty much across the main benchmarks, but the fundamentals haven't shifted and improved in kind. So how does that set up the start of 2024, January, first quarter, and going into mid-year?
Well, there are a couple of things here. Well, I think you're correct. Fundamentals haven't changed. The ability for companies to adjust to the new regime of, higher cost for inputs, seems to be in the right place. I think we have gone past the areas where many companies were or had to pass through the cost in terms of increased prices, and that created inflation. So when you see that that has actually tapered down, and we still, are at the place where prices seems to be steady, and in some areas they actually coming down. Now, what that comes into is that we've seen that labor cost has actually reduced, and that comes in wage growth that hasn't been as strong. So I think companies have adjusted to the new regime, and the fundamentals seem to be projecting that this profitability will be better going into next year. Now, on the other hand, when you think about investment analysis, what is interesting is the majority of analysts use the 10-year yield as a discounting factor. And not too long ago, they were using 5%, and now they basically have to adjust to less than 4%. So that also, changes a little bit on the dynamics on how people value companies and how these things get priced into the market.
We rotating from one sector into another at this point?
Absolutely. And I think, we've been incorporating this concept, over the course of the last, several weeks, actually going back to the end of October, where we started discussing with our clients the need to start is slowly rotating out of just the pure, highly technical technology areas, and started to thinking about areas like small caps, mid caps, and potentially cyclical sectors in preparation for a potential pivot that, was happening. A lot of that had to do with, yes, valuations, because if you recall, early in the year, the dispersion between, large cap and small cap was pretty big, as well as the dispersion between, cyclicals and non-cyclicals in the market. So I think as we see that, we already observing, the early part. We saw that in November, and I think the last couple of days we continue to see that rotation towards that early cycle type of sectors, as well as those small cap, mid cap securities that, do very well during that period.
So you expect the equal weighted index to outperform the S&P just because of that rotation and kind of a catch-up trade for next year?
Well, I think that, there's definitely the catch-up trade, and definitely technically, and there will be there. I think if we think about more macroeconomically, I think we're going to see a lot of volatility of that trade in the first part of the year after this, just technical correction that we're observing so far. I think we're going to see volatility of that trade as, obviously, there's still discussions about, how fast this slowdown of the U.S. economy will be, and that will put pressure on that trade. But I think it will consolidate once we get past that, and then we get into the early part of the cycle, which then definitely favor the equal weighted and definitely favor, more cyclicals and small caps and mid caps.
Are you still a believer in a 60-40 portfolio allocation?
Absolutely. I believe that, the 2022, that it was an anomaly where both equities and fixed income underperform. That was as a result of several factors, and we wrote about them, throughout this period. But what we saw in 2023 and going into next year is that we see that more balanced approach. And I think what is interesting, though, is that in the new world of the 60-40, now we see the contributions that you have on equities and fixed income to be a little more balanced. Prior to, this year, the significant amount of risk was associated to the 60% on equities, which was driven significant amount of returns as well as significant amount of risk, because most of the time, when fixed income rates were so low and yields were so low or negative in some cases internationally, it was not as balanced approach. Today, when you look at what, cash has to offer, what fixed income has to offer, and what equities have to offer, it's a more balanced approach that works more traditionally than what it was even in the last decade.
Omar, thanks very much. We appreciate it. Hey, before you go, what's San Francisco like right now in terms of people heading back to the office? Give us what's the lay of the land there in about 30 seconds?
I would probably say it's in the positive trend. We see a positive trend. Actually, would say the catalyst was the APEC conference that happened, several weeks ago. And since that day, things have started to just move a little closer towards that, more normal trend. And it started to look much, much better.
With President Xi in town. Omar, thanks a lot. It was a great discussion. Omar Aguilar, the CEO, CIO of Schwab Asset Management. Right now, the S&P 500, Bailey, boring, dead flat.
The volumes are there, though.
Well, that's true. A lot of people are working today. 4720 on the index. The Dow up 20 points, another record. NASDAQ 100 right now up 105 points. That's a rise of 0.7%. You are listening to Bloomberg Radio. And right now, let's get some company news. And to do that for us, here's Lisa Mateo.
You got it, John. Container shipping giant Maersk is telling any ships heading for the southern entrance of the Red Sea to halt their voyages. The company is taking precautions after an attack on one of its vessels and risks to the merchant fleet in the area from Houthi militants. And the delays could bring further disruption to global supply chains. Maersk right now is up about 7%. And it's the largest acquisition in Campari Group's history. The Italian drinks maker has agreed to buy Courvoisier Cognac from Beam Suntory for at least $1.2 billion. Now, Campari CEO Bob Kunzowitz says that it's a perfect fit for its strategy.
We've always said we want to buy aged premium brown spirits with a skew to the U.S. and to Asia. And again, it is right out of our playbook. We're pretty good at buying brands which have super latent brand equity, history, heritage, great liquids, but have been deprioritized and not really worked the right way by their previous owners.
And the acquisition comes as cognac producers face weakening demand, particularly from U.S. consumers after a surge during the pandemic. We have Campari right now. They are flat. And from fancy drinks to luxury watches, the thought of interest rate cuts could be welcoming news for a secondhand luxury watch market. According to Bloomberg's Subdial Watch Index, used prices for brands including Rolex and Patek Philippe fell when the Fed raised rates. Well, now, word that its steepest round of hikes has likely come to an end. Experts say price pressures may start to ease. Those are the company stories we're following this hour. We'll have more Bloomberg Markets in just a bit. I'm Lisa Mateo, and this is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Yeah, I'm John Tucker along with Bailey Lipschultz in for Matt and Paul this Friday. Right now, it's time to get an update on news from around the world and national news. And let's head to Washington. That's where we find Amy Morris. Hi, Amy.
Hi, John. Container shipping giant AP Moller Maersk has instructed any ships heading for the southern entrance of the Red Sea to halt their voyages following an attack on one of its vessels. Bloomberg's Karen Mascow brings us up to date.
Houthi militants have been attacking merchant shipping in the Red Sea, especially vessels that they say are connected to Israel. It's in response to the war in Gaza. The attacks appear to have escalated in the past several days, with the ship's connections to Israel appearing to be less direct, and that suggests risks are widening. At least 3 container ships have been attacked or disrupted near Yemen in the past day or so. In a statement, Maersk said its #1 priority is to keep its crews safe. Karen Moscow, Bloomberg Radio.
The U.S. Embassy in Moscow says Ambassador Lynn Tracy has visited Wall Street Journal reporter Evan Gershkovich at the Moscow prison where he's being held on spying charges. Gershkovich was arrested during a reporting trip back in March. The visit comes a day after a Moscow court upheld a ruling to keep Gershkovich in custody at least until January 30th. And there's concern that is growing for Russian opposition leader Alexei Navalny. He's still missing this morning. Prison officials say he was moved from the region where he was serving his 19-year sentence on fraud charges. They won't say where he is now, and his lawyers haven't seen him since December 6th. Former First Lady Melania Trump has made a rare public appearance today in Washington, D.C. She was at the National Archives for a naturalization ceremony.
For me, reaching the milestone of American citizenship marked the sunrise of certainty. At that exact moment, I forever discarded the layer of burden connected with whether I would be able to live in the United States.
Melania Trump became a U.S. citizen in 2006 and is only the second foreign-born First Lady. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. John and Bailey.
All right, Amy Morrissey in Washington. Thanks a lot. You've been looking at one particular story involving the Treasury Secretary and the risk to the financial system.
Exactly. We've seen...
It's such a downer.
I know. Well, AI, you look at NVIDIA stock, year to date, up 237%, added some $853 billion in market value. Well, Janet Yellen kind of sounding the alarm a bit, saying that the top U.S. regulators see AI as a looming vulnerability for financial stability. So this comes amid a lot of these conversations in the U.S. as well as in the U.K. about the potential threats of AI. These comments came during a meeting of the Financial Stability Oversight Council, which was set up after the 2008 financial crisis to deal with systemic risks, kind of calling out, this is something they're monitoring, though, according to the Bloomberg News report, relatively short report from Yellen and others.
And Wall Street has readily adapted to all that comes with artificial intelligence already. And so what? The concern is that this is going to amplify some of the risk, particularly when it comes to things like taking risk or liquidity in the markets.
Yeah, and that's really what you've been looking at and seeing a lot of conversations, whether it's from SEC Chair Gary Gensler or the Fed's Michael Barr, just kind of calling out the potential that AI systems could be challenged and be kind of impactful from a fundamental standpoint.
And this started, a few years back with what black box operations on Wall Street were basically, and now amplified by artificial intelligence. Essentially, the concern is the machines are taking over. The machines need some human judgment.
And we know that, I'm not going to go there.
Oh, please don't. Anyway, you can see that story on the Bloomberg terminal. Yellen says the U.S. to examine AI's risk to financial stability, written by Christopher Condon. And as we look at markets right now, we are higher, not by much, S&P 500 up 1 point right now. But there is a lot of volume on this Friday as we wrap up the week. Dow Jones Industrial Average, after the record close yesterday, we're higher still, up 25 points right now. The NASDAQ 100 up 108 points. You're listening and watching Bloomberg Markets.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
And I'm John Tucker, along with Bailey Lipschultz. Welcome to Bloomberg Markets. Paul and Matt enjoying a well-deserved, I think it's well-deserved rest at this point. Right now, the NASDAQ 100, the tech-heavy NASDAQ 100, knocking on the door of a record after we saw another record close with the Dow Jones Industrial Average after the close of regular trading yesterday. With that as our backdrop, let's get a market update now. And to do that for us, we switch over to Charlie Pellet. Hi, Charlie.
Thank you very much, John. And here's what's going on. The Dow, the S&P, NASDAQ, all back in the green. The S&P had been swinging between gains and losses, but right now on the S&P 500 index, we are looking at a 1-point gain right now. Little change there. Dow Industrials, as you pointed out, could see a third record in a row on the Dow, up 28 points right now, up by about 0.1%. NASDAQ Composite Index up 67, up 0.5. NASDAQ 100 Index up 107 now, higher by about 0.6%. 10-year yield 3.91% with a 2-year 4.40%. Spot gold down $3 the ounce to $2,033, a drop there of just about 0.2%. Microsoft, Amazon, and Nvidia leading a tech-fueled advance, even as pockets of doubt open up elsewhere in the markets. At the tall end of the week's everything rally. Well, as for that rally in the market outlook, David Lefkowitz is head of equities American UBS Financial Services, and he was a guest this morning right here on Surveillance.
We've seen obviously a very strong rally here. So, look, we think that the market is largely reflecting in the soft landing at this point, and wouldn't be surprised to see a little bit of just sort of consolidation of these gains because a lot of good news is priced in.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Costco has announced a special dividend of $15 a share as the warehouse club chain beat profit expectations for the fourth consecutive quarter. Costco up by 3.8%. Walmart, meanwhile, down 0.1%. The restaurant chain operator Darden has lowered the top end of its annual comparable sales forecast and tweaked its net sales projection. Darden, by the way, operates Olive Garden among many other chains. Darden shares down 1.4%. So again, recapping, stocks push higher. S&P little changed, up 1 point. The Dow at a record. 10-year yield right now 3.91%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie, thanks very much again. Markets right now, the major averages, they are in the green for the moment. With the market drivers report and a closer look under the hood, we say hi to Emily Grafeo. You made it to Friday, Em.
Yes, we're here.
Thank goodness for that.
We're almost done. But it's been really interesting to watch in this market because the stock investors, bond investors, are really not buying anything that the Fed's Williams said. They only want to listen to Powell because we saw he kind of came out.
Are you saying the markets have selective hearing?
I think so, a little bit. They only want to hear what Powell says.
Well, they've also ignored Powell. I feel like the market just wants to buy at this point.
That's true. But, I mean, Powell did kind of give the buy signal.
Well, what was it? Lisa Brownwitz, I think, said he brought tequila to the party or something like that in the surveillance newsletter. It was on the terminal.
Yes. Okay.
Exactly. But, I mean, it was interesting to see a little bit of a move higher in yields right after Williams initially said that the rate cut talk is premature, and now we're seeing pretty much all of that reversed. For some of the individual names, like Charlie had mentioned, Costco, that's up about 4% right now after announcing a special dividend of $15 a share because they beat profit expectations for the fourth consecutive quarter. I need to get a Costco membership. I only use my parents'.
Because you live in the city, or like?
Yeah.
Where's the nearest Costco?
This is what they do at the bodegas in New York City, which are like the small convenience stores. They go to Costco, they buy things like the paper towels in the 20 pack, and then they
jack up the price.
And they sell them individually, and it clearly states on each individual package of Bounty that you get in the 20 pack that do not sell this individually. So that's the way it works in New York City, at least anyway. So what else are you looking at?
I'm also looking at Intel, also up about 4% right now. The world's biggest maker of PC processors. They had an event unveiling new chips for PCs and data centers. Of course, they're trying to break into AI like every other company in 2023. I was looking at Bloomberg Intelligence kind of writing up this event. One of our analysts said Intel's event looks promising, but a large upside could take time, and also noted that the stock has already risen 71% this year, so it might be tough to see even more AI-fueled upside, but who knows? There's a lot of bullishness right now, and I think there's like you said, Bailey, an appetite for buying into the end of the year. There's just not really a reason to not buy stocks, I would say, especially with the seasonality.
No, definitely. And when you look at Intel in particular, as you said, up 77% year to date, but still only the 8th best performer in the semiconductor index, the SOX, which is up 64%. So a strong move higher and adding to those gains with AI excitement, buzzword, but obviously this still comes with NVIDIA up 235%, AMD up 115%, Broadcom up over 100%. Like these are big rallies that have been happening for a lot of these semi stocks.
Yeah, I guess one stock that hasn't had a massive rally, a tech stock though, is Zoom, because they are only up about 6% year to date, and they're being removed from the NASDAQ 100. It goes into effect on Monday. This, to me, just reads as a classic sign that that stay-at-home trade that a lot of people were piling into during the pandemic is over, and look no further than the darling of the pandemic getting removed from one of the most major stock indexes. DoorDash being added, though, which is interesting.
Yeah.
Because that was also kind of like a stay-at-home stock.
Also, one of the most active, usually, Apple shares, and they've been on a tear recently. Down today about 0.25%. What's the story there?
I mean, like I said, not really a reason to back away from what has done well this year. I just think that there's this appetite to continue the rally for the rest of 2023. But I mean, I haven't really heard a lot of strategists saying that they think the big tech rally that led this year is going to persist into 2024. I'm seeing a lot more calls on, oh, it's time to rotate into small caps. It's time for value. If you just look at the ETF flows for this week, we had some massive flows into VOOV, which is a big value ETF. So it seems like people do want to position a little bit for a rotation.
Emily, thanks a lot. Emily Griffeo with the Bloomberg Market Drivers Report. You know, it's been a tough one for Google as of late. We had the story earlier this week about their fight with Epic Games.
Epic Games, yeah.
They lost, but is their trouble over? There's a tough road ahead, potentially. Let's bring in our next guest. Jen Rhee is the Senior Litigation Analyst with Bloomberg Intelligence on the Antitrust Watch. So what's the path ahead for Google at this point, or should I say Alphabet?
Well, John and Bailey, I think Google's going to have a rough year next year. You know, first they've lost with this jury trial on the Play Store side, and the judge will be deciding what the appropriate remedy is next year. Now, there will appeal, and they have some chances there, given how different this was from Epic's lawsuit against Apple. But I don't really think that they're going to win that appeal and be able to overturn this verdict. It's a very high standard. So they're going to face a remedy in that area. The other thing that's going to happen is that there will be a verdict or a ruling in the Department of Justice's lawsuit against Google that finished trial earlier this year over its search business and whether or not it's maintaining a monopoly in Google search. And I think that decision's probably going to come out maybe late first half or sometime in the second quarter. And again, I think that's a very close call, but I tend to lean toward the DOJ winning that one. So they may also be looking at a potential remedy imposed on their search business. Then the third thing, which I actually think is the most important, or I should say the riskiest lawsuit that Google's going to face, is a Department of Justice suit that's challenging its entire ad tech business. And that is in a Virginia court that moves really fast and could possibly get to trial toward the end of the first half of next year.
How far does that go? I mean, it goes right
What
up to the Supreme Court, do you think?
Well, they only go up to the Supreme Court if there's an appeal and the Supreme Court agrees to take the case. The Supreme Court doesn't have to, and in fact, they actually only accept a very small percentage of the cases that apply to be heard. So I guess I'm assuming Google would appeal anything that it loses. So these things could actually drag out for a couple years, but at the very least, what it could see is some really bad headlines next year that impact the stock, because if they have losses at the district court, while it's not over, because they will appeal and it will continue on, those initial losses aren't a good thing.
And just to call out this week, Alphabet down 2.5%. That compares in a backdrop with the Nasdaq up 3.4% and the S&P up 2.5%. Jen, just wondering, how much could this cost Google from a monetary standpoint, given the number of cases ongoing?
Well, look, it's so hard to say. So on the search side, let me start there because I think it's the easiest. I actually don't think, even if they lose on liability and there's a remedy imposed, that it's really going to impact them in any significant way, because at this point they're entrenched. I mean, people use Google search. Most people prefer Google search to Bing or to DuckDuckGo. And even if they're in a position where they have to offer up choice screens, let's say somebody buys an Android device and they're using it for the first time and they get to choose the default search engine rather than Google just being automatically installed, or if they have to sort of open up the space to other competing search engines, people are still going to use Google. So I'm not so sure that's whatever happens there, it's going to hurt them very much. Now in the Play Store, it could hurt a lot more. They make a lot of revenues from the 15 to 30% commissions they charge to developers. And that's really going to change if these remedies that we expect stick, if they don't win on appeal, because they're no longer going to be able to keep competing app distributors off Android devices, which means people can download these apps outside of the Play Store. And they're also no longer probably going to be able to link an app developer within the Play Store using Google's payment services, which is how they collect those fees. And so I think there will be an impact. They will obviously find some other way probably to make up for that revenue and charge developers for using their services. But if competition increases, that alone is going to force them to push down their commissions. So I think that one could hurt.
This Department of Justice has been particularly aggressive in antitrust cases. Can I say that?
Absolutely.
Well, why don't they just try to wait out this administration and hope for a change at the top?
They very well could, because if they can do whatever they can to drag their heels, they can appeal, they can try to slow those appeals down. They can do those sorts of things to try to drag it out. If you think about it, way back in 2000, when Microsoft lost a really big monopolization suit, they actually got out of it in a sense because the administration changed. George Bush became the president. It was remanded to the district court, and in the meantime, George Bush's administration settled the case. And so that kind of thing does happen. Things change with administration. So certainly they can try to do that. I have to tell you, John, I wonder all the time why all these big deals I'm seeing get signed up don't just wait, because they're also aggressive when it comes to challenging mergers and transactions.
And when you look at some of the antitrust battles that Alphabet is working through, are there similar cases that come to mind that you can kind of look back at as examples of what could play out in the coming months and years?
Well, the Microsoft case I mentioned, even though it's really old at this point, is one of the best examples. Up until the last 2 years, the enforcers, which includes the Federal Trade Commission too, not just the Department of Justice, rarely ever sued a big company for monopolistic conduct. This is really new. So you had Microsoft, you had a few other little cases, and then about 5 years ago, the Federal Trade Commission sued Qualcomm for monopolization in the chip markets. They lost that case. They won at the district court. They lost on appeal. That case ended when the Supreme Court refused to review. So we don't have a lot of examples. And what we saw with Microsoft, I think that's really important for all these cases, is that while Microsoft was found guilty, one of the things the appellate court said is that a structural remedy in these instances is really drastic. And it has to be applied only with enormous caution. And the least sort of imposing or intrusive remedy that will fix the problem is the one that should be used. And so it suggests to me that if the courts are following that precedent, even if there is liability found here with Google, that structural remedies are really unlikely.
And then when it comes to social media and the debate over whether or not it's addictive, particularly for youngsters, what's happening on that front, and what are the risks to Google, Alphabet?
You know, there's a lot of activity on that front, but on that one, I'm afraid I'm going to have to refer you to my colleague, Matt Shettenelm, who covers more of the consumer protection side of the Federal Trade Commission. And he has been all over what's happening on the privacy front. And I think you'll have to speak to him because on the FTC side, when it comes to Facebook, Meta, I should say, I'm much more focused on the current lawsuit that the FTC has to try to force Meta to sell off Instagram and WhatsApp. That's the one that I'm following more so than the privacy suits, although the privacy suits have more immediacy right now.
And I guess you mentioned it, but what other trials are you keeping an eye on, or should we be keeping an eye on in terms of whether it's the antitrust space or kind of other big tech names?
Well, you know, we have a lot going on, as you both mentioned earlier, against big tech. So there's been a lot of focus on Google. There are a lot of cases against Google, but bear in mind, we also have a pretty big case against Amazon that's pending by the Federal Trade Commission, and that's challenging some of Amazon's third-party seller practices. Anti-discounting practices, they call it, that basically force sellers to provide the lowest price that they provide anywhere on Amazon. So that's pending. The lawsuit I just mentioned is also pending and could even get to trial next year, where the Federal Trade Commission has challenged Meta, saying, hey, you just run around and you have for years buying up your competitors so that you don't have viable competitors down the road. You look at these nascent up-and-coming startups, and if you think they could threaten you down the road, you're just buying them so as not to compete with them. And that's what the FTC alleges happened with WhatsApp and with Instagram. And so we have that pending too. So among kind of the big four big tech platforms that we all understood were under scrutiny, the only one so far that isn't facing a Department of Justice or Federal Trade Commission lawsuit is Apple. And that could still happen. I understand that investigation is still ongoing.
And we haven't even brought up Europe and the regulators there, yeah. But that's a discussion for another day. Jen, thanks. Always a pleasure to see you. Jen Reed, the senior litigation analyst, antitrust with Bloomberg Intelligence. Let me just check shares of Google right now. They are down 21 cents, 132.98 share in today's trading. That's down about, 0.2%. As we look at the market overall, S&P 500, I'm going to call it kind of dead flat, up a point, 47.20. At least it's in the green. Dow Jones Industrial Average, 25 points higher at 37,272. We'll say that's a record, or at least if it keeps on this pace, we'll have another third day of record close for the Dow Jones Industrial Average. And right now, the S&P 500, the NASDAQ 100, 94 points higher. That is up 0.6%. You are listening to and watching Bloomberg Markets on YouTube. I'm John Tucker, along with Bailey Lipschultz. Right back. And time for company news. With that, here's Lisa Mateo.
Thanks, John. Citigroup is shutting down its municipal business. It's one of the most dramatic moves yet by CEO Jane Fraser. We get more from Bloomberg's Sally Bakewell.
We knew that they had been weighing this decision, which is really still quite a shocking one, even though we did have some sense that this was to come, because Citi was an absolute powerhouse in this $4 trillion market for U.S. state and for local debt. It helped on deals for some very prominent buildings and landmarks, such as the World Trade Center rebuilding.
Citi down about 1%. General Motors cutting more than 1,300 hourly jobs at a pair of plants in Michigan. It comes less than a month after a new labor contract was ratified by its unionized workers. Bloomberg's Ed Ludlow has details.
The majority of the 1,300 are at the Lake Orion plant, about 945 jobs. That's significant because it was where they've been building the Chevy Bolt, which, as you know, will be discontinued, and where they had delayed plans or pushed back plans to build electric pickup trucks there. That will now take place starting in 2025.
Now, plant in Lansing, Michigan will also be affected. GM right now is down about 1%. The union representing Southwest Airlines flight attendants have called for a new vote on a contract offer it rejected last week. This comes after its voting service provider, TrueBallot, said there had been a data leak. Southwest right now is down more than 1.5%. And Chevron CFO ordering its staff to do better after missing its 2023 goals. In an email to staff seen by Bloomberg, Pierre Breber said, "We've delivered industry industry-leading performance before and will do it again. Those are the stories we're following. I'm Lisa Mateo. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index all solidly in the green right now. Looking at a 65-point advance for the NASDAQ Composite Index, up another 0.4%. NASDAQ 100 index now up by 104. That is a gain of 0.6%. S&P holding on to a 2-point gain, up by 0.1%. The Dow potentially could make it 3 winning sessions in a row at a record, with the Dow up another 34 points, higher by about 0.1%. 10-year yield 3.91%, with a 2-year 4.40%. Gold $2,034 the ounce, down 0.1%. And West Texas Intermediate crude 71.76 a barrel, up by about 0.2%. Bottom line here, we do have stocks pushing higher. NASDAQ 100 index potentially could see a record. Deutsche Lufthansa is resuming flights to Tel Aviv early next month after suspending services in the wake of the conflict between Hamas and Israel, becoming one of the first major carriers to come back to the country. Shares of Lufthansa, they are down now by 1.7%. Recapping stocks higher, S&P up by 1 point. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thanks a lot. As Charlie said, knocking on the door of possibly another record close for the Dow Jones Industrial Average, the NASDAQ 100. If this keeps up, the tech-heavy NASDAQ 100 will be on course for a record close later today. Bailey Lipschultz. Let's take a deeper dive into these markets, driving things. Where we head from here. Vince Signorella, global macro strategist, joining us from Bloomberg News. Hey, Vince, let's start off with the obligatory Fed questions with the comments that we got from Mr. Powell, et cetera. Is this an admission that maybe we've gone too far with the rate hikes from the Federal Reserve policy?
Not 100%, but I think they've gotten to the point where they said, as Powell said, we feel like we're either at or near peak. They're withholding the fact that they're at the top, given that they are data dependent. And if things turn where inflation picks up again, or the economy really rocks next quarter, which really isn't likely, they reserve the option of being able to say that they can raise rates one more time. But the change in language was significant, where the prior meeting said the likelihood of the next change in rates would be a hike. This one has basically come to where the next change in rates is 50-50, and with the dots pointing to 75 basis points in cuts, market is definitely looking for that reality.
Are you convinced this really is a pivot?
Yeah, absolutely. I think I think they've realized that they've gone a very, very long way. But PCE in the last 20 months has dropped from 5.5% to 3.5%. In reality, they're only maybe 1% away from target. I mean, 2% is going to be really difficult when you think about the size of the debt load in the United States, some 33 trillion. If they get to 2.5%, 3%, I would think they must really start to think that they've really achieved what they needed to achieve, and not try to push it too far.
Vince, you're a former trader. 6 cuts in 2024 priced in. Is that the market getting ahead of its skis, or are we really going to see the Fed kind of kick it into overdrive?
I mean, definitely over the top on that one. What I will tell you is, and I tell this to everyone, when you see swaps pricing, what you're looking at is what traders are pricing today. They have to trade what's in front of them. But swaps pricing is indicative of the price where traders are willing to make a bet today. It is not indicative of where they actually see rates being in that time period. It's just the trading and the pricing. So if you were to skew far from that pricing, you're basically going to be creating arbitrage opportunities. You're going to lose your shirt. So it's just where the market is in terms of the price on the street. It's not where they really, really, really think it's going to be. Think about when we saw that higher CPI number, swaps pricing pushed the next rate cut out to June. And then Powell speaks a day later and they bring it back to March. So that, I think, is what you need to look at when you look at swap pricing and you look where market pricing is, and what you're referring to about 6 cuts, I think, is unrealistic.
All right, those are rates and cuts or whatever. And then there's quantitative easing turning into quantitative tightening, which the Fed, that's also their purview. What is happening on that front, and is there reason to be concerned?
Well, what they're doing is they're maintaining the course of reducing their balance sheet. I think that what we really need to see the Fed do is maybe stay that course. I would like to see them cut rates in concert with reducing the balance sheet. It's almost a neutral play, if you will, because they are tightening in the sense by putting paper out on the street and taking money, reducing the money supply. I think that's where the Fed really needs and really belongs. It's where they've been historically. The Fed has not really historically been out that far on the curve, into the belly of the curve, 5 to 7 years. They've always been a player within the 1 year space when they've tried to control monetary money supply, rather. And so I'd like to see them do that a little more often, let that stuff roll off. If they want to reinvest, if they want to put money back in the street,
remind us what the stuff is that's on the balance sheet. And is that going to affect those individual markets when that stuff begins to roll off, or whatever they're going to do with it?
There's still mortgage-backed securities, and what one can easily argue, the Fed doesn't need to be in MBS markets right now. The housing market is not in crisis as it was. In fact, housing prices are at highs because of the lack of inventory. So the market doesn't need that support necessarily, and the rest of it is in treasuries, and it's out in the medium term, somewhere within the 5 and 7 year space. Love to see them get back down within the 1 to 3 year space at best. Much more manageable and out of the curve, and let the market set the shape of the yield curve, not the Fed.
Vince, the voice of the macro squawk. I know you're talking to traders all day. Where are they putting money to work? Where's the opportunities in the weekend change of the year?
You'd be surprised and shocked I'm just looking at the S&P cash right now, 47.22. Given the state of where equities have gone, a lot of the guys are talking about taking a bunch off the table, because you're looking at anywhere from CDs to government paper to if you go out to BBB corporates, near 6%, government papers 5.25%, CDs upwards of around 5.25%, 5.5%. A lot of them are looking at basically saying, if they can lock in some long-term money at 5+%, it's like buying an annuity. It's an opportunity they don't think is going to last for a long, long time, given the way the curve or the way they see rates going. And given where stocks have gone, if we do roll into a recession next year, you would expect the stocks to struggle a little bit. So they're actually looking to get out of equities and get into cash, but shorter term to medium term fixed income.
Did we overdo the market breadth story, the worry over that? Because it looks like there's been much more participation in terms of, if you're looking at the stocks that are above right now their 200-day moving average over the past few weeks or a couple of months or so, whatever the time frame was, I forget.
Yeah, I think realistically we always overdo things when it comes to that kind of stuff. I mean, although a headline crossed today where Apple I think is now 7% of the S&P. So the mega or the Magnificent Seven I think as they're being called now do make up a large gains in these markets. But realistically, in looking forward with AI, machine learning, the whole cell phone, et cetera, tech space. That's where growth is going to come. It's going to come from tech. I mean, I joke with people all the time. You're not going to buy your next cell phone from Campbell's Soup. I mean, it is going to be a tech-driven economy for a long, long time to come. And those major players are probably going to continue to take a big chunk of the market. Also, the higher you go, the harder you fall. So if we do turn into a recession, it could get very ugly for those guys.
Vince, if we had this conversation 2 months ago, it seemed like it was all doom and gloom, and now everyone's popping open the champagne. Where are we going to be at 2 months from now, just based on kind of everything that we're discussing and some of the messaging we've gotten from the Fed and expectations going into earnings season, which isn't that far off?
Yeah, I don't think we're going to be substantially higher. I don't think we're going to be a lot lower. I think we're probably going to see a lot of volatility going into the first quarter because you're going to get folks that are going to get antsy every time you see a little bit of bad news because they've got a lot of profit and they don't want to lose it. You're going to see folks who've missed this. I mean, you look at two of the major analysts on the street, won't mention their names, but looking at Morgan Stanley, JP Morgan, their two head guys missed this entire move, talking about nothing but the S&P being around 3,500 at year end. It would take an avalanche of sorts to have that happen now. And I just don't see I don't see a gloom and doom story, but I don't see major results coming out of earnings as we head into the first quarter. I think consumers are starting to get to the end of their rope, and I think we'll start to see that next year. I think we'll see the S&P higher by year end, but the first quarter, perhaps the first half, might be just good trading opportunities. A lot of back and forth, a lot of dips, a lot of highs, and things to just to play.
Vince, always a pleasure. Is that a Stratocaster on the behind you?
It is one of my collection, which my wife hates. It is a boat, well, because they take up a lot of space. But the only one that should hang up because it's in my office. It's a Bo Diddley autographed.
There you go. I'd like to hear him jam on that. Vince Signorella, macro strategist with Bloomberg News, the Fed pivot rally, the outlook for markets next year. Yeah, let's get an update on world of national news, and to do that for us, let's check in with Dan Schwartzman. Hi, Dan.
Thanks, John. Former White House Chief of Staff Mark Meadows has asked an appeals court in Atlanta to transfer state criminal charges against him to federal court. Meadows has been charged with election interference. Now, a move to federal court would allow Meadows to argue he is immune from state prosecution because his actions were related to his job. A win for Meadows could prompt other defendants to ask to move to federal court as well, which would strike a blow to prosecutors. Container shipping giant Maersk has instructed any ships heading for the southern entrance of the Red Sea to halt their voyages, this following an attack on one of its vessels. Bloomberg's Karen Moscow has more.
Houthi militants have been attacking merchant shipping in the Red Sea, especially vessels that they say are connected to Israel. It's in response to the war in Gaza. The attacks appear to have escalated in the past several days, with the ship's connections to Israel appearing to be less direct, and that suggests risks are widening. At least 3 container ships have been attacked or disrupted near Yemen in the past day or so. In a statement, Maersk said its #1 priority is to keep its crews safe. Karen Moscow, Bloomberg Radio.
Thanks, Karen. Google has decided it will change its Maps tool so that they will no longer have access to a user's individual location history. The move will cut off the company's ability to fulfill law enforcement warrants that ask for data on people who are in the vicinity of a crime. The change comes on the heels of a Bloomberg Businessweek investigation that showed that police were increasingly using warrants to get location and search data from Google, even for nonviolent cases. A storm's going to be forming in the Gulf of Mexico later this evening, with Florida expected to get hit hard on Saturday, with parts of the East Coast also being affected through the weekend. Coastal hazards, heavy rainfall, and strong winds are expected. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Dan Schwartzman, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow at the record. Right now, we've got the S&P lower, little change. Tech stocks, power higher. Microsoft, Amazon, and NVIDIA, some of the biggest outperformers today. Healthcare giants, United Health, J&J, Eli Lilly, all lagging. Microsoft now up by 1.4%. Amazon up 1.3%. NVIDIA up 1.5%. United Health, Johnson & Johnson, I should say, trading lower by 1.5%. United Health down 1.4%, and Lilly lower now by 0.5%. So stocks are trading mixed, little change. That's the key takeaway on the S&P 500 index. The Dow, though, at a record, up another 13 points, a gain there of less than 0.1%. The Nasdaq Composite Index up 0.4%. The Nasdaq 100 Index up another 0.5%. 10-year yield 3.91% with a 2-year 4.41%. As for the interest rate backdrop, Nicholas Venditti is Senior Portfolio Manager at Allspring Global Investments, and he was a guest this morning right here on Bloomberg Markets.
The reality is, even though maybe you missed the peak in interest rates are still substantially higher than they were just a couple of years ago. And so from a pure opportunistic standpoint, I think fixed income still looks attractive as part of an asset allocation.
And you can hear more of the conversation on the Tape podcast. You can download it wherever you get your podcasts. Again, we've got gold, little change now, down $3 the ounce, down by about 0.1%. And West Texas Intermediate crude oil is up 0.1%, $71.65 for a barrel of WTI. Recapping, stocks are trading mixed. S&P down a point now. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, thanks, Charlie Pellet. I'm John Tucker, along with Bailey Lipschultz. We are in for Matt and Paul.
Hanging out, enjoying this Friday. I think we're absolutely crushing it. We got another 20 minutes to go, and we are now joined in the Interactive Broker Studios, John, with Brett Martin. He's the GP and co-founder of Charge Ventures, a Brooklyn, New York-based pre-seed venture capital fund.
Okay, explain to me
Brett,
what
so
a pre-seed venture
money
capital fund
is writing the first check to founders, and you guys are focused on what you guys would call cutting-edge technology. So do these
Wait, you can get me in on the ground floor of something?
That's right. You want the next Facebook? Next TikTok? You got it.
So are companies are coming and pitching you? Like, how does kind of the pre-seed world work, especially given that you're based in Brooklyn and not the Silicon Valley?
Well, it's a little known fact, but New York on any given quarter can be the largest venture capital market in the world. Our doors are open, DMs are open, LinkedIn is open, so feel free to hit us up. But yes, it is a lot of being embedded in the network. I've been in New York City tech for the past 20 years. Watch it go from a backwater to occasionally the biggest venture capital market in the world.
So what's your track record now? I'll have to preface by saying, if you get one home run out of, I don't know, 1,000, you're doing okay, I guess, in this business, right?
We're doing a little better than that. We're, almost 10 years in, 3 funds in, 75 portfolio companies, and at least 4 have gotten over $1 billion. So I think we're doing a little better than 1 in 1,000.
What are those companies? Do we know them?
Yeah, we were just talking about Grin. It's a CRM for influencer marketing. If you're a brand and you want to get your product in the hands of influencers and out in front of consumers, Grin has the tools to do it. We're in companies called Electric AI. Electric AI is basically a service that if you want to have outsourced IT rather than pay someone to turn a wrench, now that everything's over the cloud, you can use Electric to run your IT. And then we've got a bunch of new companies that you haven't heard of, but you will in the next couple of years.
Okay, well, again, how does it work? They come to you, you go looking for them, or what?
Well, it's a combination of both. Sometimes when we have a space, we are a generalist fund, but we are thematic in the way we think about things. So we've been thinking a lot about the future of work, for example. So, 2023 was the year of the return to office, but anyone who owns an office knows that didn't really happen. I think in 2024, you're going to see with commercial real estate occupancy stuck below 50%, you're going to see employers capitulate for this return to office fantasy and finally start to really invest in.
Oh, I got people you need to talk to before you leave.
I mean, let's go. But they're going to capitulate and they're going to start to really invest in next gen tools for remote and distributed teams, because every team now is distributed. So, for example, we invested in a company called Kumo Space. They make a unified communications platform for remote and distributed teams where all your people and their conversations are in one place. And so we got folks from Fortune 500 companies like Google and KPMG in there, to government agencies like NASA and NOAA, all the way to fast-growing startups. They're all using that to kind of replace Zoom and Slack and actually build, remote work tooling that works.
You're firmly in place with remote work, right?
Yeah, I mean, I've been doing it for years.
Back to the office is not a thing for you, right?
Oh, yeah, listen, if you want to close a deal, you better show up in person and shake a hand. But I did 24 calls on Thursday, and I can assure you can't do that in person.
Yeah, I'm telling my, the price of housing. Who can afford, it starts at like $1 million in my modest neighborhood. I tell my kids, work remotely, move to Detroit, and they'll pay you to buy a house, that sort of thing.
Just plug some of my friends. Tulsa Remote, it's a great program. They'll actually pay you to move to Tulsa and work your nice remote job from there. Use Kumo Space to do it.
But I don't want to get too far afield on the topic here. But,
so Brent, we were talking before the segment. You guys are cutting checks, you said, between basically $250,000 and up to $1 million. How has that evolved? I cover IPOs and kind of the flow of capital, whether it's VCs and private equity. How has that changed in the last few years, given how early you're investing?
Well, we had obviously a huge run-up in venture capital over the past decade. Went from being a cottage industry to a real institutional asset class. Then obviously market correction over the past couple of years. 2022, 2023 was a tough year. I think 2024 is actually going to be a reckoning year for startups. A lot of folks that raise big rounds are going to run out of money this year, and the venture capital industry will shrink. The public markets, I'm lucky we're making big bets on long-term tectonic trends like AI and remote work, but we have to pay attention to the public capital markets because they affect us. So, the IPO window, some folks tried to get out, Instacart, didn't really work. They're down 75% from their private market high water mark.
But even if that's the case, you guys, because of how early you are, would make money. I guess kind of like to John's point, if you hit a home run every 50 at bats, you're covering it just based on the potential exit. Like, what is your exit strategy on a successful business, and how does that play out?
Well, yeah, so we underwrite to a minimum of 10x, but the truth is, we're getting in at valuations below $10 million, $5 million pre-money valuation, $10, $20 million. So when something exits for $1 billion or $10 billion, we're not just making 10x, we're making 30, 40, 50x. And that's what we've done. We invested in a great company called Bison Trails, sold to Coinbase. DPO day, we pulled out for a nice multiple.
And we mentioned that Gen AI is the topic of the year. I talked to some guys in private equity and VCs who point and say it's probably a bubble, right, on the private side, and they're more than happy to put money to work, kind of like the Tiger Global model. Is that how you view AI?
Yeah. Yes, both. In the sense that it's obviously overhyped. Our market is like it's like when you pull something out of the freezer and then you put it in the microwave. One bite's scalding hot and one bite's freezing cold. So fintech's freezing cold. Gen AI is super hot. Should it be hot? Well, let's say different than crypto is you had a lot of companies that were making money in crypto, selling to other bag holders. Gen AI, you've got companies out there that are making real money today from real companies, going from $0 to millions of dollars in revenue in a couple months. It doesn't matter what industry you're in, that's impressive. And so that type of growth is going to attract capital. Now, whether those companies are durable, that's a question we haven't answered yet. But for example, we've invested in a company like Wand.tech. They're basically a new tablet app for professional artists to leverage Gen AI to really scale themselves, or a company like Toolkit AI. They are building infrastructure for AI.
Brett, pleasure.
Oh, thanks so much for having me.
Yeah, that was great. Brett Martin, partner with Charge Ventures, based in Williamsburg, Brooklyn. And you're listening to Bloomberg Radio. Bloomberg Markets myself, John Tucker, and Bailey Lipschultz. Stay with us. And let's get an update on company news. And for that, here's Lisa Mateo.
Thanks there, John. Costco has announced a special $15 dividend after continuing a string of solid results. Bloomberg's Abigail Doolittle says traffic was the biggest contributor.
They're also talking about seeing moderating prices, about flat to up 1% versus what had been up 1 to 2%. They are saying that their strong value added, high renewal rates, and club expansion plans make Costco well positioned. On the year, Costco is really the best in class for these big box retailers. Target, it's down a little bit on the year. BJ's Wholesale Club basically flat. Walmart up about 7%.
Now, as far as membership fees, its CFO said it's a matter of when, not if. Costco right now, they're up nearly 4.5%. And more evidence that electric vehicle sales aren't going so well. Bloomberg's Gina Cervetti has that story.
Cox Automotive reports that EV inventories on U.S. dealer lots hit a new high this month and that stockpiles were more than double what they were a year ago. U.S. consumers are growing increasingly wary of EVs because of high prices and the spotty charging infrastructure.
All right, on that, we'll check in with a few EV makers. We have Rivian right now is up about 1%. Tesla is up about 0.5%. And since we're talking about Tesla, Tesla's owner Elon Musk received some good news for his other company. We're talking about SpaceX. The company received U.S. approval to run tests on signals between Starlink satellites and mobile phones on the ground. Now, it'll partner with T-Mobile to target areas without coverage. The 6-month authorization would involve about 2,000 test devices and 840 satellites. I'm Lisa Mateo. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
And I'm John Tucker along with Bailey Lipschultz. You are listening to Bloomberg Markets. Time now to get an update on world and national news. And for that, here's Dan Schwartzman. Hi, Dan.
Hey, John and Bailey. Hungary has blocked an important European aid package to Ukraine just hours after European Union leaders agreed to start membership talks with Ukrainian officials. Hungary was the only nation out of the 27 EU members to oppose the 50 or so billion euro funding package. Now, Hungary's Prime Minister Viktor Orban is considered the closest EU ally to Russian President Vladimir Putin and is also opposed to allowing Kyiv into the EU. Google is going to be turning off a feature on its maps which will hurt law enforcement. More details from Bloomberg's Amy Morris.
Google is changing its Maps tool so the company no longer has access to users' individual location histories. It cuts off its ability to respond to law enforcement warrants that ask for data on everyone who is in the vicinity of a crime. The change comes 3 months after a Bloomberg Businessweek investigation that found police across the U.S. are increasingly using warrants to obtain location and search data from Google, even for nonviolent cases and even for people who had nothing to do with the crime. Google will roll out the changes gradually through the next year on its own Android and Apple's iOS mobile operating systems. Amy Morris, Bloomberg Radio.
Thanks, Amy. More than 400 Yazidi Americans have filed a civil lawsuit against French conglomerate Lafarge SA for providing material support to ISIS. Last year, the company pleaded guilty in Brooklyn federal court for engaging in a criminal conspiracy to support not just ISIS, but also another terrorist group. For almost a year-and-a-half time frame, Lafarge agreed to make payments to the benefit of armed groups in Syria. A storm's going to be forming in the Gulf of Mexico later this evening, with Florida expected to get hit hard on Saturday, with parts of the East Coast also being affected through the weekend. Coastal hazards, along with heavy rainfall and strong winds, are expected to hit as far north as Maine. That'll be by Monday afternoon. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Dan Schwartzman, and this is Bloomberg. Back to both John and Bailey.
All right, Dan, thanks a lot. Well, I was debating whether or not to do this story. Bailey was really set on it. This is from The Independent. Engineers in Japan, we were talking about the energy transition. It's not easy, but these engineers have trialed a new rocket engine powered by liquid methane, Bailey.
Yeah. Liquid methane is sourced from cow dung. And they call it the satellite is Zero, is what it's dubbed. It's powered by liquid biomethane, or LBM, which is derived from, quote, livestock manure sourced from a dairy farm.
Really? I mean, it's just like methane is actually one of those greenhouse gases that is pretty potent. And I wonder what this rocket, when it takes off, what it actually smells like, the propellant. But methane, unlike carbon dioxide in the atmosphere, it dissipates much more quickly. Although it's far more potent than carbon dioxide, like I say, it doesn't stick around for as long as some of the other greenhouse gases. But using it as repellent, as opposed to some of the other, hydrogen or whatever like that, it's one of those alternatives out there.
Yeah, it's interesting to see how this is playing out, and maybe, as you mentioned, we take some of the things that are cast off from the dairy industry, whether that's cow dung or other things, as they call it, LBM, can help fuel rockets. But you're a big pilot guy, right?
Yeah, it used to be. Not anymore. No, but I wouldn't put cow dung.
You would not do cow dung
in my aircraft engine. It's just. Although Richard Branson did with what was it? The fuel that they used, a biodegradable fuel, recently on a trip from London to New York, I believe, on one of the Virgin jets.
Looking for other ways to be a little bit greener or browner, depending how you want to look at it. But yeah, definitely a fun story for the startup. Again, rocket engine dubbed Zero was kickstarted in a 10-second static fire test.
A world-first test of an LBM rocket, and we bring it to you right here on Bloomberg.
I bet you didn't think 30 years ago when you started at Bloomberg we'd be talking about cow dung rockets in Japan, but here we are.
Yeah, no, today made it feel like 50. S&P 500, 6 points lower at 47.13. Bloomberg Sound On with Joe Matthews starts right now. Bailey, thanks. It was a pleasure.
From our nation's capital. This is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
The Senate will keep working. Welcome to the fastest show in politics, as Chuck Schumer tells members to stay in town, even as the House calls it a year, with hopes for progress on a border deal that would unlock funding, of course, for Ukraine and Israel. The saga continues. We'll have the latest for you from Capitol Hill. And we're going to get granular on what a border compromise could look like in a conversation with Will Hurd, the former congressman, former CIA officer, and former Republican presidential candidate, is with us live in just a moment to share his take as well on the campaign. With insights today from our signature panel, they're back together. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis with us for the hour. And it's all after a look at Wall Street. Let's get up to date on trading right now with Charlie Pellet in New York. Hey, Charlie.
Hi, thank you very much, Joe Matthew. Happy Friday. The Dow pushing higher. The Dow with a record up another 17 points to 37,266, up less than 0.1%. But again, 3 potentially in a row. We've got the S&P lower by 5 now, drop there of 0.1%. The NASDAQ Composite Index up 21, up 0.1%. The NASDAQ 100 Index up 54 now. That is a gain of 0.3%. S&P 500 Index on track for a 7th week of gains. 10-year yield 3.91% with a 2-year 4.41%. Spot gold down $3 the ounce to $2,033, a drop there of 0.1%. And West Texas Intermediate crude oil up 0.3%, 71.79 for a barrel of WTI. So it is an up day with the Dow, the S&P, NASDAQ. The trading mixed right now. We did have the S&P higher earlier in the session. As for the inflation outlook and the economic backdrop, Greg Dako is chief economist at Ernst & Young.
Whether it's rent disinflation, slower momentum in terms of growth activity, even wage growth compression, and the fact, let's not forget, that the Fed is still maintaining a restrictive monetary policy stance. Combine all of those, and you have all the right ingredients for a disinflationary environment.
Costco Wholesale has announced a special dividend of $15 a share as the warehouse club chain beat profit expectations for the 4th consecutive quarter. It is the company's first special dividend since late 2020, when investors got $10 a share, according to data compiled by Bloomberg. Costco shares, they're up now by 4.5%. Recapping mixed market right now with the Dow, NASDAQ, they're both higher. S&P lower, down 5, drop there of 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Right, Charlie, thank you. Welcome to the Friday edition of Bloomberg Sound On. I'm Joe Matthew in Washington, where things are a bit quieter today. But like at the end of the horror movie, when the hand comes reaching out of the water, that's Chuck Schumer's hand, telling members they're not leaving town quite yet. They're expected to report to work on Monday, even as, yes, the House heads home for the year. The question is he keeping members here because of progress that he wants to harness on a border deal? Or is he keeping them here to apply pressure so there is some progress? What we're hearing from those at the table is remarkable. Senator Cornyn, by the way, there's no reason for us to rush to pass something that's dead on arrival in the House. That's going to be an issue. But look at Senator Kyrsten Sinema, one of the 3 primary negotiators that appears at this moment. Quote, I can see a deal, unquote. The White House now deeply involved. Chris Murphy says that might generate something. And we want to talk about specifics because we've been having broad stroke conversations about what could be a once-in-a-generation opportunity to handle this problem. And the person we wanted to call to talk to you with about it is Will Hurd, and he's joining us right now. The former congressman, of course, former CIA officer, former Republican presidential candidate, who has had a lot to say about the border, of course, not only because of the location of his district, but as a former intelligence officer, has a good sense of the technology involved in some of the demands that we're hearing from the border that escape politics frequently here in Washington. Congressman, it's good to see you. Welcome back to Bloomberg here. Before I ask you about specifics and where we might find common ground on a border deal, I'd like to know if you think it's even possible. You know the people who are at the table here. Do you think we have enough good faith in Washington? Is there any to cut a compromise on such an important issue?
There is, because it makes good sense politically, right, is the bottom line. And I think the answer to your questions and the lead up to this was yes to both of them. Yes, they're staying in, the Senate is staying in Washington because they can see the outlines of a deal. And two, they're staying in Washington in order to force it to happen. What always shocks people in Washington, D.C., you can have debates that take months to negotiate, and they can get sorted out in the matter of hours when there is a clock ticking. And there's nothing better to force elected officials to do something than for them to try to get on a plane to get back home before Christmas.
Well, so what's real? We have already seen H.R. 2, and Speaker Mike Johnson says that's the starting line here in the House. His members don't want anything short of that. It did not receive a single Democratic vote. But we are hearing about common ground on tightening asylum law. I'd like to start there with you on what that might look like, because this is an administration that wasn't even having that conversation a couple of months ago. Will Hurd, to what extent should asylum law be redefined?
Well, asylum law should be very simple. We don't even have to redefine it. Stop treating everybody as an asylum seeker. Like, this is an actual policy within the Department of Homeland Security that comes down from the top. And this was a policy that began under Donald Trump. And so one of the things that's being discussed is what's called expedited removal. Basically, somebody comes across the border illegally, they're in Border Patrol's custody, and then they get deported quickly without going through some of the immigration hearings in order to determine whether they meet the rules for asylum. And I always have to remind people, wanting to come to America to get a better paying job is not a reason for asylum. You have to be part of a protected class. Yeah. Look,
do you have to be under physical threat? Before we move on, does it need to be escaping violence or physical threat versus harsh economic conditions that qualify you for claiming asylum?
Yeah, you have to be targeted by your government because you're part of a protected class, or your government is not protecting you from being targeted because you're part of a protected class. And those definitions, State Department has that. It's very clear around the world where there's pockets of this kind of thing happening, right? If you're a Uyghur in China, you're getting screwed by the government, okay? There's a good reason for being able to apply for asylum. There's some cases when it comes to Venezuela where there's good reasons for asylum. So that's the part that is like, the law is actually very clear, and the Biden administration is not adhering to those existing standards. Now, so what does that look like in a deal for Congress? A funding deal to improve with ICE, who is the Immigration, Customs, and Enforcement, who's responsible for deporting people. Give them more money to deport more people, right? Like, that's something that has to be at play. And when I said at the beginning of this makes sense politically, Joe Biden should be happy that Republicans are willing to deal on this, because this could give him a political victory going into 2024, because the nonsense that's happening at the border is an issue. And so the people to watch in this case is actually not necessarily Republicans. It's what are the Democrats going to be willing to deal with President Biden on this, because President Biden really wants to see a victory here.
Where should the president fall on safe third countries? This is something that has been getting a lot of debate here in Washington as well, and I know is on the table in this negotiation.
Well, look, it's simple. Like, where the policy should be is, you got to be a part of a protected class and being targeted by your government. You can't apply for asylum any other way, right?
But what if you're coming through another country?
If you're coming through another country, it still starts with where you were from, right? And you should also be applying for asylum in the next contiguous country. That has been the norm around the world, right? This is one of those issues where when you look at humanitarian groups in Europe that are looking kind of at America like, y'all are a little bit crazy, because we're the only ones that are allowing people to travel halfway around the world in order to apply for asylum. You should be applying for asylum in some cases in your host country or in the first opportunity outside of the country where you're being targeted. And so that look, this is at the end of the day, people are abusing this process. And they're wanting to come to America to get a better paying job, which is fine. And this is where the Democrats are real frauds, negotiate on streamlining legal immigration. Right? You know, this is something that I've spent a lot of time trying to work on. And the reason the Democrats are the obstacle from streamlining legal immigration because they don't want to get cross with many of their big labor unions.
Well, that's interesting because we need workers in this country. If we're approaching full employment, real immigration is a conversation that we need to have at the same time as security. As we spend time with Will Hurd on Bloomberg Sound On, I'm just curious when it comes to technology, what we should be spending our money on. We're having a debate again about whether to finish a wall that Donald Trump says was already done, and I guess Mexico is going to pay for it. I know that has not been your preferred approach. If we have money to spend at the border on security, should it go to drones? Should it go to these new observation towers, these unmanned towers that are being erected? What do you see in our future?
Well, the Innovative Tower Initiative started when I was in Congress, and I helped pave the way to make that happen. What we should be achieving on our border is operational control. That means we know everything that's coming across our border in either direction. We don't have that. And the 2,000 miles of border in Texas, every mile is different from every other mile. So you need the right tool in some places. Where there's urban-to-urban contact, a physical barrier makes sense. But in other places, where it takes Border Patrol hours or days to respond to a threat, you need the ability to determine there's a threat, to track that threat until you're able to deploy your most important resource, the men and women in Border Patrol. So it could be LiDAR, which is basically radar using lasers. Yep. It could be night vision cameras. It could be drones. It could be sensors in the ground, right? Like we and DHS has done a review of every mile and what the right tool is, execute on that. And it's a whole suite of technology that we need. And we shouldn't be wedded to any one, let alone a fourth century solution that people can get around. And so that's
should it include buoys?
Look, so in some on our coast, yes. Look, this debate about buoys and preventing people from coming across the border, you should let the folks on the ground decide what the right tool is in that case. You would stop having people potentially drowning in the Rio Grande River if you stop creating a pull factor by letting anybody come here and apply for asylum and spend 3 to 4 years in America when they came here illegally.
As a former intelligence officer, a former undercover CIA officer, are we hearing rhetoric about bad actors crossing the border, coming from other countries, from Iran, from China? This is part of the messaging that we're getting from some Republicans in Washington. Do we have evidence to that extent, and how worried are you about it?
Well, there's no question that we've apprehended people that have been on a number of lists that elevate them as a potential threat to the country, right? There's no question. There's no question about that. And how that happens, there's been, a couple of months ago, I remember in the middle of the campaign, there was an ISIS smuggler, someone who was known to be an ISIS smuggler or had connections to a known ISIS smuggler that was apprehended coming across the border. And so that is happening. And, fortunately, men and women in Border Patrol are able to apprehend this, and the intelligence services are feeding the right data. But we should be concerned. We should also be concerned with our biggest adversary, the Chinese Communist Party, coming in here and doing intelligence operations. A couple of years ago, there were a number of Chinese astrophysicists that snuck across the border and act like they were they applied for jobs as janitors at at SpaceX. And part of it was in order to get access to rooms and capabilities and understand what was happening with that collaboration between SpaceX, NASA, and American spaceflight. So those are some concerns that we should have as well of our adversaries using that porous border in a way to conduct some intelligence operations.
I wonder if they got to meet Elon. Will Hurd, you left the presidential race some time ago. I was amazed to see that the date on your endorsement for Nikki Haley was the 9th of October. A lot has happened for her campaign since then, and she's really become the candidate to watch based on the conventional wisdom. I know she has a long way to close the gap with Donald Trump. Can she win the New Hampshire primary?
She can absolutely win the New Hampshire primary. The Republican nominee for president is down to two people, a man and a woman, Donald Trump and Nikki Haley. Nikki Haley has had real momentum. That's why I endorsed her. She is, we have a choice between chaos and drama of Donald Trump or thoughtfulness, being a pragmatic approach and getting things done with Ambassador Haley. And look, some of these endorsements, her recent endorsement of Governor Sununu, who's well liked up and down the ballot in New Hampshire, and then also organizations like Americans for Prosperity. They have an amazing ground game in New Hampshire. I saw it firsthand. I'm familiar with the organization. They've been helpful to me in previous elections. And so this is a real opportunity. And what people are failing to realize that President Biden is not going to be on the ballot in New Hampshire because of all the decisions within the Democratic Party on which states should go first. And so you're going to have a lot of unaffiliated voters in New Hampshire. Yes, right. 40% of the voters, primary voters, are registered unaffiliated, which means they can pick whichever ballot they want when they go into the ballot. And there's a lot of people that they're not getting factored into polling that are going to vote for someone like Nikki Haley. So Ambassador Haley has a real shot. She's on the ground. She has a great organization on the ground, and this is one to watch. And I think, and then the thing that the press is failing to do. We talk about all this recent
got 10 seconds.
Sure. That Donald Trump is ahead of Joe Biden. Nikki Haley has an even bigger margin against Joe Biden in a general election.
Well, we are seeing that in our polling as well. Will Hurd, if you're in Iowa or New Hampshire, come see us. I want to have this conversation with you in the early states. Will Hurd, former congressman, former Republican presidential candidate. The panel's next. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 121 on Wall Street. We do have stocks trading mixed right now, with the Dow higher, the S&P lower. NASDAQ is advancing. The NASDAQ 100 index on track for a record. Could close at an all-time high after Fed Chair Jay Powell signaled this week that the Fed's aggressive heightening campaign is nearing its end. S&P right now down 3, lower little change, down 0.1%. Dow Industrials on track for another record, up another 17, up by about 0.1%. Right now, the Dow is at 37,263. The NASDAQ Composite Index up 30, up by about 0.2%. The NASDAQ 100 Index at a record up 69, higher by 0.4%. We've got the 10-year yielding 3.93%, with a 2-year at 4.43%. Gold down 0.6%, $2,033 the ounce, while West Texas Intermediate crude oil is up 0.1%, $71.63 a barrel. Tech stocks are the outperformers. Microsoft, Amazon, and Nvidia leading a tech-fueled advance. Right now, we've got Microsoft up 1.2%, Amazon up another 1.3%, and Nvidia up now by just about 1.6%. So again, recapping, stocks are mixed. S&P lower by 4, down 0.1%, while the NASDAQ 100 index is up 0.4%. At a record. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Fascinating conversation with Will Hurd on the granular details of what a border deal could look like, and it certainly gives you a sense, maybe a better understanding, I hope, of why this is so complicated and why it's been so difficult to achieve. Either way, Chuck Schumer thinks they're onto something, whether he believes that or not. He's saying it out loud. He did address Senate members from the floor late yesterday.
For the information of all senators, after we finish today, the Senate will return on Monday. That will give negotiators from the White House, Senate Democrats, Senate Republicans, a time to work through the weekend in an effort to reach a framework agreement. It will then take some time to turn that framework into text. To prevent unnecessary delays, I intend to move to reconsider the shell for the supplemental as a vehicle to move an agreement forward. The plan is for the Senate to act as soon as we are ready to move forward on the supplemental.
Says they could vote as soon as next week on the supplemental, he said. This is not just the border deal they're looking at. They're going to actually try to do this $106 billion thing that the White House asked for, which we were told was dead on arrival in the House. Let's assemble the panel. Jeannie Sheehan Zaino is back with us. Rick Davis here, 2 Bloomberg Politics contributors. Great to see you guys. Welcome to the threshold of the weekend. Jeannie, is Chuck Schumer dealing with reality here? We're going to get something done before the holidays?
You know, it's possible. I hope that his optimism is, comes to fruition. I am not as optimistic about this. You can just hear when you hear about all that is still left to do. So even if they were able to get the Senate to pass this, does anybody really believe it is going to pass the House in the short term? I don't think so. I hope I am wrong on that, but there's so much ahead of them to resolve. And you've got both the left and the right upset by what they're hearing on immigration alone. You add to that the Iowa caucus, January 15th. Does anybody really think Donald Trump is going to let Joe Biden strike a deal on immigration? It's very hard for me to imagine that this happens.
Rick, Speaker Mike Johnson, I guess on his way out of town, says the House will not wait around to receive and debate a rushed product. Even if they smash something together in the coming days, will it be taken seriously by the House?
You know, if the Senate passes this, whatever this is, and it looks like the supplemental is the bill of du jour today, there's going to be enormous pressure on Mike Johnson to act, right? I mean, like today, there's no pressure because there's no bill. The minute that bill passes the Senate, you'll have the entire Israel caucus hitting the House Republicans saying, we need this and we need it now. You're going to have the entire Ukraine caucus hitting the House leadership. We need it and we need it now. You're going to have Republican groups who want to see tighter border security passed hitting the House saying, this is a decent border deal. Let's take it while we can because we don't know what's going to come in the future. This is the last chance between now and 2025 to get any serious legislation done on the border. And you can only imagine the heat that Johnson's going to get if the Senate Republicans, weigh in behind this border deal. It's something they like, and it's just going to be overwhelming. I mean, it's all those constituencies and more. Even the anti-China caucus is going to have a voice in this. And then, as Jeannie says, then on the other side, you got, Donald Trump. Good luck, Mike Johnson. You're about to have a horrible January.
It doesn't sound fun. Senator Van Hollen calls it a surge effort, Jeannie. He said, I think this is lock everyone in the room over the weekend and see how far they can get. How far can Chuck Schumer push this? We're going to get into Tuesday, Wednesday, Thursday. They're going to want to go home.
They absolutely will. Nobody is going to be liking, Chuck Schumer for doing this. He is right to do this. I think, quite frankly, the House should have stayed in because beyond this, they've got a lot of other things to do. So I'm not sure why they're off it either. But, he's going to push this, but Rick just said it. We don't even know what this entails. That's the reality of this. We haven't seen an immigration bill since Ronald Reagan. And, you think about just one thing they're talking about and how fraught that is for people who really care about this issue. When you think about expanding fast track, you're talking about making 11 million undocumented people in this country carry papers. This is not just about the Republican right. Rick is right. There's going to be pressure from all these quarters. But you've got a lot of people at a very fraught time for Joe Biden who are already upset about what's going on in Israel with Hamas and the war. Now you're going to tell them that you are going to, without anything in terms of a pathway to citizenship, you're going to move further in the Republicans' direction on immigration. Can Joe Biden really risk that at this point? So there's so many politics all around. And again, look at the Republicans. Are you going to get Republican conservatives and moderates to agree on this? Republicans and the Freedom Forum, they want the border shut. And then you've got people thinking about jobs. They want them more open. So from every direction, if this gets done, in my view, it's something of a mini miracle. I still don't see it. I don't even see it in January, but maybe there's a shot then.
Well, I can certainly respect your skepticism here, though, Rick. There's an independent at the table named Kirsten Sinema. And fascinating to read her quote in Politico this morning, quote, I can see the deal. We have a lot to go to get there, but I can see it, unquote. She's been trying to work on something with John Cornyn since she was a Democrat back in the olden days. What does it mean to have an I at the table along with the D's and the R's?
Look, when she was a Democrat, she delivered infrastructure, $1 trillion bill that Joe Biden spends virtually every waking hour cutting ribbons for tunnels and bridges. So she knows how to get deals done with Republicans, and she knows how the Democrats can push your buttons. So I think that the fact that you've got Senator Langford, the Republican, Chris Murphy, the Democrat, and Kirsten Sinema, the independent, behind this effort to craft something that'll pass, I think that gives it a high likely chance that you're going to have a bill. Whether it passes or not, when you get the votes for it, is a little bit different, but you'll have a bill. And I would remind Jeannie that the House just passed the National Defense Authorization Act, stripped of virtually every single one of the Freedom Caucus poison pill culture deals that were included in it at its beginning. And so nobody thought that was going to get done before the end of the year, and it got done. So let's just take a step back, let Congress exert their will and see what happens. But I'm more optimistic, I guess, than most.
What's it going to be like, Rick? And I'm asking you this as somebody who's been there before. You went all the way up to the line and, well, I guess even over it with John McCain when it came to immigration reform. Is Chris Van Hollen right? They're actually going to be in a room hammering this out over the weekend? Is this a bunch of Zoom meetings? Do they go out to dinner? To bring our listeners and viewers inside.
Yeah, there are a lot of different groups within the Senate, within the Republican Party, within the Democratic Party, within the Socialist Party, and the likelihood is they're going to spend every waking hour with each other. They're going to be, working hard with their teams, their staffs that are experts at these issues. That is the good news about things like border issues. They've been around a long time. And there are a lot of very well-educated individuals who bring a professionalism to this effort. And you have, I think, a real willingness to want to work across the aisle. The Senate has been an absolute bipartisan gem all year long, producing deal after deal across the aisle. And so, Mitch McConnell is going to be talking to Schumer about trying to make sure that the vote goes right. Look, we got 58 votes on a comprehensive immigration plan right before our presidential election year in 2008.
Unreal.
And that's the last time we've seen a comprehensive bill voted on. So it's high time something got done. This is nowhere near the level of comprehensiveness that the McCain legislation entailed, but it's a great step forward. And as Jeannie pointed out, first time something really has a chance to pass here, since Ronald Reagan.
Man, you must be having flashbacks. 58 votes. Can you imagine? That wasn't that long ago, but I guess it really was. My goodness, it was 15 years ago, and here we are again in a very similar situation, potentially. John McCain got further than this group has gotten, but we'll continue this conversation with Rick Davis and Jeannie Shanzano. After we bring you up to date on the news, we're going to hit the campaign trail next. World and national news with Dan Schwartzman in the Bloomberg newsroom in New York. Hi, Dan.
Hey, Joe. Former White House Chief of Staff Mark Meadows has asked an appeals court in Atlanta to transfer state criminal charges against him to federal court. Meadows has been charged with election interference. Now, a move to federal court would allow Meadows to argue he is immune from state prosecution because his actions were related to his job. Container shipping giant Maersk has instructed any ships heading for the southern entrance of the Red Sea to halt their voyages, this following an attack on one of its vessels. Bloomberg's Karen Moscow has more.
Houthi militants have been attacking merchant shipping in the Red Sea, especially vessels that they say are connected to Israel. It's in response to the war in Gaza. The attacks appear to have escalated in the past several days, with the ship's connections to Israel appearing to be less direct, and that suggests risks are widening. At least 3 container ships have been attacked or disrupted near Yemen in the past day or so. In a statement, Maersk said its #1 priority is to keep its crews safe. Karen Moscow, Bloomberg Radio.
Thanks, Karen. Hungary has blocked an important European aid package to Ukraine just hours after European Union leaders agreed to start membership talks with Ukrainian officials. Hungary was the only nation out of the 27 EU members to oppose a 50 or so billion euro funding package. Hungary's Prime Minister Viktor Orban is considered the closest EU ally to Russian President Vladimir Putin. Google has decided it will change its Maps tool so that they will no longer have access to a user's individual location history. The move will cut off the company's ability to fulfill law enforcement warrants that ask for data on people who were in the vicinity of a crime. The change comes on the heels of a Bloomberg Businessweek investigation that showed that police were increasingly using warrants to get location and search data from Google. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Dan Schwartzman and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P. They are both in the red right now. NASDAQ, though, up 26, a gain there of 0.2%. The NASDAQ 100 index right now up 61, up 0.4%. NASDAQ 100 index is poised to close at a record after Fed Chair Jay Powell this week signaled the Federal Reserve's aggressive hiking campaign is nearing an end. We've got the 10-year now yielding 3.92%, with a 2-year 4.43%. Gold down $13 the ounce at $2,022, drop there of 0.7%, and a retreat for West Texas Intermediate crude on this Friday. Right now, WTI is down 0.1%, 71.48 a barrel. Bottom line, those stocks in the red, with the S&P down 7, lower a little change, down less than just about 0.2%. There is fresh data on American manufacturing, and with that story, here's Bloomberg's Vinny Del Giudice.
The Federal Reserve reports factory output staged a tame comeback in November, reflecting the end of the U.S. auto strike. Year-over-year production is down as manufacturers contend with elevated interest rates. Other reports have also disappointed. The New York Fed's factory index weakened. The S&P Global Factory Index stumbled. Vinny Del Giudice, Bloomberg Radio.
Speaking of those manufacturers, General Motors is cutting more than 1,300 hourly jobs at a pair of plants in Michigan, less than a month after a new labor contract was ratified by its unionized workforce. The automaker said in filings with state regulators that a plant in Lake Orion, Michigan, outside Detroit, will lay off 945 employees. A facility in Lansing, Michigan, will lose 369 workers. That Lake Orion plant, by the way, manufactures the Chevy Bolt electric car, which the company will cease production of at the end of the year. GM down 1.5%, rival Ford down 1%, Stellantis lower by 0.3%, Tesla up 0.4%. Recapping, stocks are mixed, with the S&P 500 index down 10, drop there of 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Chris Christie just threw the Hail Mary pass in New Hampshire. If you listen to this program, if you listen to Rick and Jeannie, you know he's put all his chips on the first in the nation primary state, and he's up with his first ad. Will it be the only ad? Might be the question. It is a 6-figure ad buy here, and it's going to be going up on local TV, on cable news. It's called The Only One.
Nikki Haley, down by 26 in her home state to Trump, attacks DeSantis. Too lame to lead, too weak to win. DeSantis, down 32 to Trump in Iowa, attacks Nikki Haley. You can't trust Tricky Nikki. There's only one candidate trying to stop Trump. Chris Christie is the only one who can beat Trump, because he's the only one trying to beat Trump.
I'm in this race. Okay. So you get this, it goes on, and he talks about how he's going to go after Donald Trump, but he's not really going after Trump here. He's going after the other two, Ron DeSantis and Chris Christie, attacking them for attacking each other. Let's reassemble the panel. Rick Davis and Jeannie Shanzano are here, Bloomberg Politics contributors. Jeannie, as you watch New Hampshire and you consider the potential fortunes for Chris Christie, what does he get out of a 6-figure ad buy here? Is this something that might be geared more toward Ron DeSantis? Because he's talking pretty tough about Nikki Haley. Doesn't sound like he's about to endorse her.
It doesn't. I think this only plays ultimately into the hands of Donald Trump. You listen to this ad, he's going on and on about how these people can't beat Trump. Well, you know who can't beat Trump? Chris Christie. They need to consolidate against or behind somebody who can run against Donald Trump and has a long shot at this point. That person now is Nikki Haley. Your conversation with Representative Hurd, he made the same case. The reality is she's got the momentum. She has the support. She's getting the endorsement. She's still well behind, but she's a lot closer than Chris Christie. So To me, I think he is, just really, really playing into Donald Trump's hands here. And it is baffling to me that he's continuing on, except that he's invested a lot of time and money. He's got donors who have donated, and he's going to see this through New Hampshire, but it is helping Donald Trump as he does that.
Rick, I want to ask you about the strategy here and where they're placing this at. Again, it's six figures. That's not that much money. I guess you have to go local when you're in New England. I suspect they'll buy Manchester and Boston. But they're targeting on cable CNN and Morning Joe on MSNBC. And by that, I mean not Fox, not Newsmax. Is he looking to bring Democrats over to vote in this open primary?
Well, he can't bring Democrats over in this primary, and a six-figure buy won't buy you Boston TV. You know that better than anybody.
Okay.
So it's a local buy, and the cables are really, I think, feather bedding for his next job, either on Morning Joe or on CNN. I don't know. I mean, I'm almost at the point
So this
where
isn't a big independent spree here.
Yeah, I mean, look, he wants the independents to vote for him. He knows he's, maxed out on Republicans. He's got, by the grandest measure, 10% of the New Hampshire Republicans voting for him. They're the never-Trumpers. As Jeannie points out, all of those never-Trumpers would be for Nikki Haley if he weren't in the race. And so he obviously wants to hold on to them and see what kind of deal he can get with the independents. The independents aren't well polled. They are a substantial, almost 40% of the primary, maybe even more this year, since there's no active Democratic primary. And so, yeah, I mean, he's throwing the Hail Mary pass, as you said. I mean, I'm more inclined to believe the conspiracy theory that Trump put him up to his campaign at the very beginning, probably helped him with some donors, and said at the last minute, I'm going to say bananas, and then you're going to attack my closest opponents. So bananas been called.
Do you think, are you being real? Is that what's happening here?
No, I'm being completely facetious, but these days, that
I have to make
doesn't really
sure.
matter anymore.
No, you're going to end up on Twitter if I don't make sure that you're being sarcastic. Jeannie, I've got to ask you about what's going on in Nassau County. Republicans have put up a candidate to fill the seat or vie for the seat once held by a guy named George Santos. And as we've discussed, there's going to be a special election to fill that seat. Introducing Nassau County legislator Mazi Pilip. This is fascinating. What a story to tell. She served in the Israeli Defense Forces. She's former IDF as an Ethiopian-born Jew who fled to Israel as a child. This is some kind of a storyline here, except she's an enrolled Democrat. Am I missing something here, Jeannie? There are Democrats running as Democrats in that race. Why her?
And she's a sitting Nassau County legislator on the Republican side. So, this is a swing district, as we know. There is some school of thought that the fact that she's running as the Republican, but is a registered Democrat, may help her in this district. I do have to say her backstory is incredibly impressive. Amongst other things, she is also the mother of 7 children and a very accomplished woman. But, unlike in the case when George Santos was running, we're seeing a lot of vetting. And one of the things that reporters like you have uncovered is that she is a Democrat. There's also a lawsuit involving her husband's business that shouldn't probably impact her. But this is going to be a really tough, much watched district. The special election is February 13th. But of course, New York now is going to be engaged in redistricting. It probably won't be before then, but certainly right after that. And we are going to be just right on top of the June primaries and then the November general. So this is going to be fascinating to see who comes out on top here. Tom Suozzi, the Democrat, is a well-known figure in those parts. He has his own challenges, including a progressive liberal
well, he also happens to be an actual Democrat. I don't know.
Yeah.
Rick, just a minute left, Rick. Do you tend to check what party your Republicans are enrolled in before you run them?
Sure. But as Jeannie pointed out, she's already a legislator under the Republican wing. It's really unique. I think that basically the Nassau County chief said, I want someone who's diametrically the opposite of our previous member of Congress, the former George Santos.
I guess that's a win, then. We can check that box. It's going to be an interesting race, though, and why Democrats wouldn't just vote for Tom Suozzi. remains a question. We'll keep tabs on this for you. You better believe with Rick and Jeannie. I'm Joe Matthew in Washington. We're just getting started on the fastest show in politics. Some final thoughts with our panel ahead. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet, developing story and a headline right off the Bloomberg Professional Service. DocuSign said to be working with advisors to explore a sale. This, according to the Wall Street Journal. We do have DocuSign shares surging now by 9.7%. Again, that headline worth repeating. DocuSign working with advisors to explore a sale, according to the Wall Street Journal. Streaming platform Roku trading lower after MoffettNathanson cut its recommendation on the stock to sell from neutral. Roku shares, they are down by 6.8%. General Motors cutting more than 1,300 hourly jobs at a pair of plants in Michigan. With more, here's Steve Rappaport.
Charlie, word comes less than a month after a new labor contract was ratified by its unionized workforce. The automaker said in filings with state regulators that a plant in Lake Orion, Michigan, outside Detroit, will lay off 945 employees, and a factory in Lansing, Michigan, will lose 369 workers. The staff reductions at both factories are effective as of January 1st. The job cuts come after the automaker committed to wage hikes that were approved last month by United Auto Workers members. The Lake Orion plant manufactures the Chevy Bolt electric car, which the company will cease production of at the end of the year. The Lansing factory produces the Cadillac CT4 and CT5 models, as well as the Chevrolet Camaro sports sedan, which GM has said it will stop making next month. Charlie?
And that's Steve Rappaport reporting GM down 1.6%. Again, DocuSign said to be working with advisors to explore a sale. Those are our top company stories. This is Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
We are live from Washington, where we'll add Kaylee Lines to the conversation in just 5 minutes after some final thoughts from our panel. First, though, let's bring you up to date world and national news now from Dan Schwartzman in the Bloomberg newsroom in New York. Hi, Dan.
Hey, Joe. The Israeli military says that it mistakenly killed 3 hostages while conducting operations in the Gaza Strip. The Army's chief spokesman, Rear Admiral Daniel Hagari, says troops had mistakenly identified the 3 as a threat. It's not clear, though, if the hostages had escaped their captors or were abandoned. The Army has expressed, quote, deep sorrow for the mistake and are conducting an investigation. Meanwhile, the U.S. and Israel are in the midst of discussions for a time frame on when combat operations can be scaled back. This despite both sides agreeing the overall war will take months. Google is going to be turning off a feature on its maps which will hurt law enforcement. Those details from Bloomberg's Amy Morris.
Google is changing its Maps tool so the company no longer has access to users' individual location histories. It cuts off its ability to respond to law enforcement warrants that ask for data on everyone who is in the vicinity of a crime. The change comes 3 months after a Bloomberg Businessweek investigation that found police across the U.S. are increasingly using warrants to obtain location and search data from Google, even for nonviolent cases and even for people who had nothing to do with the crime. Google will roll out the changes gradually through the next year on its own Android and Apple's iOS mobile operating systems. Amy Morris, Bloomberg Radio.
Thanks, Amy. According to Harvard's website, applications for early admissions by high school seniors this year compared to last year are down by 17%. The drop comes on the heels of incidents of anti-Semitism on campus in the wake of Hamas's attack on Israel on October 7th. Harvard's leadership, led by school president Claudine Gay, have been heavily criticized by Jewish students for not keeping them safe. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Dan Schwartzman, and this is Bloomberg. Back to you, Joe.
All right, Dan, I appreciate it. Some rare remarks today, some rare candid remarks from the former First Lady, Melania Trump, back in Washington. Doesn't happen often these days. At the National Archives for what was an important ceremony, a naturalization ceremony that saw 25 immigrants become U.S. citizens. She spoke at the ceremony. This happened just a short time ago.
Becoming an American citizen comes with responsibility. It means actively participating in the democratic process and guarding our freedom. For me, reaching the milestone of American citizenship marked the sunrise of certainty. At that exact moment, I forever discarded the layer of burden connected with whether I would be able to live in the United States.
Final thoughts from our panel, Jeannie Shanzano and Rick Davis. We don't have to be too controversial here. I'm just curious, Jeannie, the way Americans are supposed to look at Melania Trump. Has she succeeded in sort of extracting herself from her own marriage, at least politically?
You know, I think it's hard. I don't think she has done that yet. Obviously, her husband very much in the news and very much running. But I think this is an important reminder about who she is apart from him. And I think it's important to listen carefully to what she has to say about her own experiences as an immigrant.
We never see her with him these days, Rick. What kind of role do you suspect that the White House would want her to play if Donald Trump became president again?
Well, I suspect she is independent enough to determine what role she's going to play, and she'll tell the White House. Yeah. But I appreciate the fact that, you know, she honored institutions today, the institution of the archives and of naturalization ceremonies. And I think supporting those institutions is actually a very positive thing in today's current political environment.
Well, I'm with you there. We're talking all hour about a potential border deal, and we focus and obsess over security, probably for real good reason. But I think to Will Hurd's point earlier, we don't talk enough about legal immigration, Jeannie, and I think that she was speaking to that today, even though the former president is promising to reinstate the Muslim ban if he is reelected. And you wonder how all of this is somehow rationalized within the same household. Great to have both of you with us. I hope you both have a great weekend. Jeannie Shanzano and Rick Davis, our signature panel for a reason. They'll be back on Monday. And Kaylee Lyons on the way in next. I'm Joe Matthew in Washington. Hour 2 of Sound On starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
The White House tells Israel it should be weeks, not months. Welcome to Hour 2 of Sound On, as the administration calls on the IDF to begin wrapping up this phase of its war with Hamas to help spare civilian lives. All this on the same day that Israel says it mistakenly killed 3 hostages. That headline just crossing the terminal. We'll have the latest, and we'll discuss it all with Jim Gilmore. The former governor of Virginia is with us, former U.S. ambassador to the Organization for Security and Cooperation in Europe. Will also weigh in on the need to fund our allies, including Ukraine, as Vladimir Putin leans into winter. Later on, we'll turn to the economic impact of AI in conversation with Aflac Chief Innovation Officer Keith Farley and with David Weston, the host of Bloomberg Wall Street Week. Kaylee's along for the ride this hour. Here we go again with a look at Wall Street. It's all coming up after we check on trading in New York. Here's Charlie Pellet.
Thank you very much, Joe Matthew. Indeed, looking at a mixed market right now. NASDAQ has just turned lower, so we have the Dow, the S&P, NASDAQ all in the red, but the NASDAQ 100 index potentially could see a record today of 25 right now, up by about 0.1%. We are continuing to monitor shares of DocuSign. The stock now up by 12.5%, the most intraday since June, following that Wall Street Journal report that the company is working with advisors to explore a sale. Now, the Journal report said the conversations are in the early stages. The Journal citing sources. Right now, we've got DocuSign up by 12.1%. But again, developing story, just got word a few minutes ago. DocuSign said to be working with advisors to explore a sale. Stocks are trading mixed. We have got the S&P 500 index in the red, trading down by 14 points now, drop there of 0.3%. The Dow giving up earlier gains, have been on track for another record, but right now the Dow is down 0.2%. NASDAQ Composite, I'm calling it flat on the day, but the NASDAQ 100 index up now by about 0.2%. 10-year yield 3.92% with a 2-year 4.47%. Max Kettner is chief multi-asset strategist at HSBC Bank, and on surveillance this morning he told us he's concerned that sentiment might be too bullish.
Let's remember, one of the key ingredients of continued Goldilocks is that people continue to fight it, is that people always find some sort of stuff that can go wrong, right? Something, some downside factors that can derail that. Whereas all I'm hearing right now is everything's perfect, right? With the Fed pivot now, this is the green light. It can only go up from here.
And you can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Spot gold down $16 the ounce to 2019, drop there of 0.8%. West Texas Intermediate crude up 0.1%, 71.62 a barrel. The restaurant chain operator Darden has lowered the top end of its annual comparable sales forecast and has also tweaked its net sales projection. Again, recapping, DocuSign shares, they are up by 12.5% after the Journal said the company is working with advisors to explore a sale. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you. Good to see you on a Friday, and welcome to the fastest show in politics, Hour 2 of Sound On, live from Washington. I'm Joe Matthew. Now alongside Kaylee Lyons. Kaylee, it's great to see you, and we have breaking news on Israel here, which is not good, that just crossed the terminal a short time ago, remembering the calls from the White House for restraint to protect civilian life. There's also been the matter of protecting the hostages, many of whom we don't really know where they are.
Yeah, their whereabouts highly uncertain, given Hamas itself isn't necessarily hosting or holding all of them in the same place. There's other entities at play here. But yes, from the Israeli military itself, releasing a statement today saying 3 hostages were mistakenly identified as threats during fighting, shot at, and therefore killed once they were brought back to Israeli territory and identified. They did confirm it was 3 Israeli hostages. Just obviously, Joe, very awful to see, and a reminder of how much innocent life is being lost in this conflict.
Well, absolutely, and still how little we know about the location and the identities of some of these hostages. We know it's been in the area of 120, but we actually don't know, Kaylee, because in some cases Hamas is not holding them any longer. Other groups are in Gaza, and the more questions we ask, the more we realize how much we don't know here. We heard from John Kirby, of course, the retired admiral, speaks for the National Security Council in the White House, about a conversation that Jake Sullivan had with Benjamin Netanyahu. Jake Sullivan in the region, more shuttle diplomacy, and the calls for restraint by the IDF are growing more intense as Sullivan asked for a new phase of less intense fighting within weeks, not months. Here's John Kirby.
Jake also discussed the next phase of Israel's military campaign. And he asked hard questions, as we have been doing, about what all that could look like. He did talk about possible transitioning from what we would call high-intensity operations, which is what we're seeing them do now, to lower-intensity operations sometime, in the near future. But I don't want to put a timestamp on it.
And that's, of course, one of the real issues here is how long can this go on for and have the administration continue to support the mission?
Well, exactly, especially when here at home, there's growing pressure from within the president's own party to take more caution when it comes to the cost in civilian life, the humanitarian aspects. There are many Democratic members who are talking about an outright ceasefire, not just a lowering of intensity that we're hearing from the White House.
Well, this is one of several issues we're dealing with today in Washington. The other, of course, brings us to another ally that's in a hot war, and that's Ukraine. And great questions about whether we're going to be able to support either of them, all hinging on a debate over the border. Kaylee, we've been steeped in this since we started talking about an hour ago. Chuck Schumer's keeping senators in Washington.
Yep.
They're coming back Monday to work. Supposedly negotiators will be busy all weekend. The question is, will this be in vain, somehow solving a generational problem in the next 4 days?
Yeah, you're certainly seeing a lot of skepticism on the Republican side that this realistically can get done, even beyond just a very simple outline. Then there's the other consideration, and that's the House of Representatives.
Yeah.
Say the Senate is able to sort this out.
Right.
Next week, the House is still gone, and the House may not like whatever compromise senators reach with the White House here.
Well, they're telling the Senate it's already dead on arrival there.
Yeah.
And we've been talking about this for days, if not weeks now, which is a great opportunity to bring in a special guest. Jim Gilmore is back with us on Bloomberg. Someone I always think of as the former governor of Virginia, the former chair of the RGA, but actually spent time in foreign affairs in an important role that brings us to this conversation now as former U.S. ambassador to the Organization for Security and Cooperation in Europe. Mr. Ambassador, I feel like I should call you governor, but welcome back to Bloomberg. It's good to see you here. A big case needs to be made in Washington, I guess. Then again, we're not really talking about the need for funding in Ukraine. We're talking about the need for border security and a border deal to unlock that funding. Should this conversation be happening the other way around?
Well, we know what's happening, and that is that the Republicans believe that they're not going to ever get any serious action from the White House or from the Democratic Party unless they use the Ukrainian and Israeli money as leverage. We know what's going on. My view is that the border issue is legitimate. It's something that ought to be taken up. There's a consensus in the United States that it ought to have to be addressed. But I don't think we ought to lose sight of the reality here, that the real strategic threat to the United States rests in Ukraine. Ukraine is the pivot on which the future is going to turn. If the Russians are able to conquer Ukraine and absorb them into the Russian empire by force, violence, and atrocity, they change the entire rules of the game, not just in Europe, but worldwide. And America has everything at stake in this. It is vital that this money get passed to go to Ukraine and also to Israel.
Mm-hmm.
So, sir, what is your message to your fellow Republicans on Capitol Hill? Even if border security is a legitimate issue, is this really the way, or are they going about this incorrectly?
Look, if it were me, I would make darn sure that the Ukrainian money is authorized. You don't want to give encouragement to Putin. This confusion is already giving encouragement to Putin. Putin is a war criminal. He is an aggressor, and it has to be stopped. And I think that there's a consensus also regarding the Israeli money as well. No, I think that is vital. I understand why it's going on. Frankly, I can't see the issue here. It seems to me that the White House and the Democrats ought to be able to work on a border compromise that the Republicans can live with, and then we can get on about this serious business of financing our national security in the international field. And I might say another thing.
Sure, go ahead.
Well, what I was going to say is this. Listen, I don't want to be unaware of the power of messaging like we're doing right now on Bloomberg Radio. You need to persuade the American people that this Ukraine crisis is real. You have to persuade people. The Israeli war is on every day and every minute, but the real crisis here is Ukraine, because that's the threat to Europe, which is a threat to the United States if it goes the wrong way. Now, with that being said, the president has the bully pulpit. He's the one that has to make the case to the American people, and he isn't doing it. Maybe he can't do it. But in any case, the public has to understand exactly what's at stake here.
He seemed to be trying pretty hard the other day when he hosted President Zelensky at the White House. But I'm curious, Ambassador, about the messaging on this legislation. Why not call this the U.S. Defense Restocking Act or the Protect America's Defense Supply Chain Act or something? The fact is this $60 billion is largely going to states like Georgia, Texas, Alabama, that are home to our defense contractors. Are they selling it the wrong way?
I think it's a reality that America's power rests not only in its national government, its military, but also our supply chain and our defense contractors. I know a lot about that. I worked with them quite a bit. And this is an element of American power. And they're not going to contribute these things for nothing. You can't expect that in a capitalist system. It's not going to be expropriated. So it's reasonable that this funding is going to go in order to supply the weaponry and the other resources necessary for Ukraine to prevail. And by the way, they are prevailing. Russia decided they were going to conquer the whole country, and it's clear now they can't do that unless we surrender here in the United States. If the United States politics grows now to all of a sudden being defeatists or people who are surrender types, people that want to give up on this issue and put it off to another decade, we're going to pay a big price for this move.
Well, you may call it defeatist, Ambassador. Others will call it isolationist. And it seems like there is a growing number of Republicans in Congress and arguably in the presidential field as well who are adopting that worldview. What do you think of that?
I do. Isolationism is exactly what's going on. I characterize it as
appropriate?
Yeah, it's appropriate. And frankly, people ought to read exactly the history of the United States in the 1930s when America had a strong isolationist element about it, and it kept us out of the war, and the Nazis conquered Europe. And we now are seeing the exact same thing. We need to learn the lessons of history here. And this is easier to do. It is the Ukrainians that are fighting for their own lives and their own safety and sovereignty. We're putting in a reasonable amount of money. I'm not diminishing that. It's very hard for Americans to focus on this when they're thinking about inflation and the border and all the other issues that have emerged in this administration. But the fact is that this is a serious moment when we have an opportunity to stop this kind of aggression in Europe and preserve the principles and values of the American people.
So I guess what I hear from the ambassador here, Joe, is that isolationist may be an appropriate way of categorizing this way of thinking, but not necessarily an appropriate way of thinking during a time of such conflict around the world.
Well, that's right. Correct us if we're wrong here, Ambassador, because that's the direction that many in the Republican Party want to take. In fact, I think you could even argue that's what the front runner is calling for here in this presidential cycle. What do you tell your Republican colleagues when you hear talk like that?
Well, we don't actually know what President Trump is going to do if he's reelected. I know when I was taking a strong position in Vienna at the OSCE, nobody was pushing back on me and telling me to prevaricate or to stand aside. I was pushing very hard on the Russians on behalf of the United States. But my message to our isolationist friends is turn away from this. This is dangerous to the United States. If America draws back within itself, then at that point our allies may very well lose heart, and the politics of Europe may go haywire. And Putin may be in a position to reassemble his empire the way that he says he's going to, maybe even including an attack on a NATO power. And then at that point, if we don't do anything because we're isolationists, then at that point that collapses NATO, which is exactly what Putin wants to do.
Well, sir, we certainly appreciate your view of the world here, especially given your former ambassadorship. But also, I'd like to ask you a question, and it is a Friday. This is on a bit of a lighter note, regarding a state you were formerly governor of, the state of Virginia,
hat back on now.
Which has now attracted potentially 2 new sports teams. The Caps and the Wizards going to cross the river, Governor. What do you think of the deal and what it must have taken to make it happen?
Well, if it can actually come to fruition the way we hope, I think it's a really good thing for Virginia. It's probably a really good thing for these teams. You know, I've been following the NBA because I always follow UVA players that go to the NBA, and one of them is Anthony Gill, who plays for the Wizards. So I'm looking forward to following him.
That means everybody's got to cross the river, though, Ambassador. I'm going to call you governor for this portion of the conversation, and they're not going to be able to park over there. How's this all going to come together?
Well, I spent a lot of time in Alexandria, and it's pretty busy up there, I must say. So
Yes,
they're going to have to figure all that out.
Well, as a resident of Alexandria, this is something that I am acutely aware of, and I'm wondering how this is going to impact my my home values here, to speak on a very personal level. But, Governor, what's the possibility? What are the odds of this turning back around at the 11th hour and these 2 teams staying in Washington based on a counteroffer?
Well, look, it's never done till it's done. I learned that when I was governor. It's never done till it's done. But I think that Governor Youngkin has really moved this ball a long way up the field, if you will. And he's to be commended for it. I think it'll be good for the teams, good for Northern Virginia, good for economic development. But you're right about this. I'd be very careful when I got in my car what restaurant I wanted to go to.
Very fair. Well, you mentioned Governor Youngkin. And Governor, last time you and I spoke, it was on the day of the elections in Virginia, a month and change ago, where there was talk of him potentially being able to achieve a red wave, perhaps give him some momentum toward an eventual presidential run, something you yourself have tried a few times. Do you think those ambitions are diminished for Youngkin, given how that actually turned out?
Well, I think that you can't underestimate Governor Youngkin. He's a very vigorous leader. And, of course, this is a nice feather in his cap, the way we've been discussing it. You know, I think that it would have been better if that election had turned on issues like crime, inflation, President Biden himself. I think that could have happened, and it probably would have yielded a better result. But look, never count out a governor of Virginia that's well-financed. Never count him out.
Spoken by one. Jim Gilmore, it's great to see you, Governor and Ambassador. We always welcome you back here to Bloomberg. Happy holidays if we don't see you again before then. Fascinating conversation. Are these teams going? Is this real? Or is this conversation supposed to be the stuff that prompts them to stay?
I think it's kind of anyone's guess at this point. It's real for now, Joe.
On to Virginia.
It's just whether it stays real.
On to Virginia, by God, with Jim Gilmore. I'm Joe Matthew with Kaylee Lyons. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. A surge for DocuSign with the stock now higher by 14.5%. DocuSign software handles electronic signatures. The stock is surging after the Wall Street Journal reported that DocuSign is considering a sale. DocuSign up now by 14.6%. And Citigroup is once again allowing most of its employees to work from anywhere for the final 2 weeks of this year. Citigroup shares down now by 1.8%. The S&P lower as well, down 10, drop now of 0.3%. NASDAQ is advancing 21 points, up by 0.2%. NASDAQ 100 index possible. We could see a record there, up 55 right now, a gain of 0.3%. The Dow, which had been on track for a third record, is in the red. Dow Jones Industrial Average down 52, a drop there of 0.1%. 10-year yield 3.92%, with a 2-year that's yielding 4.44%. Spot gold down $18 the ounce to 2017, a drop there of 0.9%. And West Texas Intermediate crude oil is down 0.1%, 71.52 for a barrel of WTI. Bottom line here, equities giving back gains. The dollar is advancing after Fed officials threw cold water on optimism for earlier and deeper rate cuts next year. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Considering the implications of AI, and if you're with us on YouTube, we're actually bringing you inside the Bloomberg terminal right now. If you've seen the movie Tron, this is sort of the financial data version. I'm Joe Matthew alongside Kaylee Lines. Take a look at this infinite landscape here inside the terminal.
Darkness.
Kaylee, this is cool. Go to YouTube, search Bloomberg Global News, and you'll see what I'm talking about. It's a little bit different than normal here in this blackness, where we find ourselves considering, as I said, the economic implications of AI. Ooh, look at that. Did you see that?
We're back. Oh.
We're going to keep playing with this as we feel our way through the program. For those of you listening on the radio and the satellite, let's move on. We hear a lot about AI taking over the world, eliminating our jobs, Kaylee.
Yeah.
The other side of the coin is it makes us more productive. Right. Maybe it makes our lives easier. It's a change agent for good. No one seems to be in the middle on this.
Yes, I feel like it's one of those divisive topics where you either think it is going to be the end of all things or the beginning of a lot of things that we can't even imagine yet. And maybe it is a little bit of both. It may bring an end to some things, but enhance and complement other things. But the reality is no one really has their heads fully around it yet to know which ways to control it and which ways to utilize it fully.
Unless Keith Farley does.
Maybe he does.
I've been hearing a lot about Keith Farley from our producer, Matt. He's the Senior Vice President, Aflac. And you say, wait, Aflac, is he like, why would an insurance company need a technologist and an innovator who's working on AI?
Right.
And maybe that helps to answer the questions that we're asking. Keith Farley, welcome to Bloomberg. It's great to see you. Maybe you can start by answering that question for us. Does every insurance company have an AI guy?
I would assume so. Thank you, Kaylee and Joe. Glad to be with you guys. I would think every large company and many small companies do. It's such a transformative technology that I would imagine most people do have their eyes on it, as we do here at Aflac.
Okay, so you have your eyes on it, but what does that actually translate into? What is Aflac doing with AI? What ways are you thinking about AI?
It's a great question. So we look at AI in terms of what are repeatable, somewhat mundane tasks. Humans aren't really great at them anyway, and there's an opportunity to free up time for those humans so that humans can do more human-like things, empathy, relationships, strategic thinking. So like just as an example, Kaylee, let's say that you wanted to update your address with Aflac. We can use AI to do that kind of transaction with you. But if you're diagnosed with a serious disease or in an accident where you're hurt, that might be a time where you want to deal with a person. So we've freed up time for our people to be there for the most important parts of the experience.
Is the idea to move ahead with what you can here on the next frontier in quantum computing, or wait for the regulators here in Washington? Because this Keith, is the story that we talk about a lot on this program, to create some sort of framework, God forbid I use the word guardrails, on how this is actually going to work safely in the future.
Yeah, there's a lot of things to consider, Joe, I think, with that. And I'm glad that people in D.C. and people in other parts of the world and their governments are discussing it, because I think there are a lot of implications. There's a lot of opportunities, but I think we want to make sure everything's done safe and correctly. And the way that AFLAC approaches it is pretty middle of the road. You know, we look at what are our simple things we want to automate and make sure that we're taking advantage of technology. But I wouldn't say that we're trying to be on the cutting edge of trying things that are unproven or unknown. You never know what the unintended consequences would be, so we play it safe.
Well, Keith, I get how you're using it just inside the business, trying to enhance and make things easier for what you actually have to do operationally. But how are you thinking about it bigger picture? I always think of AFLAC, and obviously everybody knows the duck. And if you're watching on YouTube, you can see a duck that is behind Keith. But it's about when you're taken out of work and there's, you know, insurance to receive that compensation. When we're thinking about like the workplace overall and what AI is ultimately going to mean for it, are people going to end up displaced?
Yeah, I think like any technology, jobs are going to shift, the type of job that you do. I mean, if you think about, even the fact that we're, here on a podcast and there's a YouTube version of it right now, 20 years ago, this wouldn't have been possible, right? So jobs change. But, I think when we talk about AI, we mustn't forget that the first word in AI is artificial. And sometimes you want something truly authentic, and that's only an experience that humans can provide. And at AFLAC, that's what we look for, is where do we need to have that authenticity that a human can provide versus when is something artificial okay because it's more transactional.
Are you going to have any sort of consumer-facing impact here where the concern becomes authenticity? Are you using this in your marketing, Keith?
So not yet from a marketing standpoint. What I would say is, consumers might feel it through, again, transactional things they would do, at changing their address, updating their bank information. That's where they can opt in to work with our AI for it. But if it's someone who's filing a claim, maybe it's a wellness claim, which you get just for going to the doctor for regular checkup. That's pretty straightforward. Some people might want to use an automated system. But when you've been diagnosed with cancer, as an example, that's when we think it's a time to speak to a human and make sure that you understand all of your options and all of your coverages. So that's how we decipher where we would bring in technology versus have a human experience.
Well, it seems, Keith, that really all we're hearing about in terms of technological advancement, or at least all that gets the oxygen, is artificial intelligence. AI is the future. AI is going to change everything. Every company is investing in AI or throwing the phrase artificial intelligence into their earnings report to hopefully get some kind of boost about it because of all the mania. Is AI really the only frontier now for innovation when it comes to technologically advancing businesses and business operations? Or are there other areas as well?
I think there's a few areas, but obviously AI is taking the news right now. Sometimes I wonder, 25 years ago, this same interview would have happened and we would have talked about the internet and it's coming and you can do things online or on the line. And I'm not sure if I'm comfortable with that and how our company is going to react to the internet. And are you taking your company and going to provide things on the internet? I think AI is just the next digital revolution. In the same way that companies leaned into, well, how can we conduct business on the internet and what do customers want to do? We need to have that same conversation on AI because I do think that it's revolutionary. But there's lots of other technologies that are considered out there. AI is definitely the one that everyone's talking about right now, and I think for good reason.
Well, so are you watching what Congress is up to, or do you have your doubts that anything will come out of Washington to control this technology?
Yeah, we definitely keep an eye on it. I think that it's something that we should all talk about. We should talk about it as companies. We should talk about it as a society. Government should talk about it. We need to figure out, how do we make sure that everything is safe? When it comes to AFLAC, we're going to take a conservative approach. We are in the business of managing risk. That's what we do for a living. So we look at what the risks are with any technology or any new development. But I think that it is appropriate for both the U.S. government as well as all governments to talk about, how do we make sure that this is safe for everyone involved?
Well, Keith, we appreciate your coming in to talk to us. Keith Farley, Senior Vice President at AFLAC, even showed up with the duck. Kaylee, have a great weekend, Keith, as it's something we continue to talk about from so many different angles here.
Yeah.
It's like we could take a different wrinkle on this every day.
Well, especially knowing that 2024 is very quickly approaching. It's only a few weeks away. There is a lot of campaigns that are now utilizing artificial intelligence, not just in terms of their own technology, but in their advertisements as well. And you're starting to see some kind of crackdowns on that, if you will, or at least concern about it. I was just noting a Bloomberg law piece out on the terminal today that California lawmakers are looking at legislation to further crack down on deep fakes. They're concerned about protection before elections.
It's just interesting that the White House already put up guidelines on that, but it can only do so much on its own. And you wonder to what extent we end up with a patchwork of states, like so many other things here, when it comes to use of AI, where a campaign can do something in Texas that it cannot do in California, but once it goes online, it doesn't matter, right? I guess we'll find out how this works in California.
I guess
I mean, you can always stop things at the border when it comes to the internet. But once things start to circulate on social media, it becomes its own story. It doesn't matter where they bought it or where they targeted the ad.
Right, which then is how you also have all of these social companies that are involved in this conversation as well. Why members of Congress have subpoenaed for technology social media companies to join them on the Hill to kind of testify around these issues. And of course, that very first AI forum, remember that when like every big tech CEO in the universe
you were there for that.
Went to tell the Senate about AI, but
this is back when you could still talk about Elon Musk without getting into an argument.
Well, that's debatable.
Well, fair enough. I won't push it too far here. We're going to continue this conversation with David Weston,
Yeah.
who's also getting his arms around AI on this evening's Wall Street Week with the former CEO of IBM, and look forward to that coming up next. After we bring up world and national news, let's do that with Dan Schwartzman in the Bloomberg newsroom in New York. Hi, Dan.
Hey, Joanne Caley. One day after Nassau County and Queens Republicans selected Long Island County lawmaker Mazi Melissa Philip as their candidate to replace expelled Congressman George Santos, the Ethiopian-born former Israel Defense Forces paratrooper held her first press conference. Philip says taxes is a major issue.
As a county legislator, I supported 2 tax-free budgets with our county executive and my colleagues in the legislature. I am the only candidate in this race who can say that I have not supported tax hikes.
That's the Republican candidate for Congress from Long Island, Mazi Melissa Philip. The Israeli military says that it mistakenly killed 3 hostages while conducting operations in the Gaza Strip. The Army's chief spokesman, Rear Admiral Daniel Hagari, says troops had mistakenly identified the 3 as a threat. It's yet not clear if the hostages had escaped their captors or were abandoned. The Army has expressed, quote, deep sorrow for the mistake and are conducting an investigation. Meanwhile, the U.S. and Israel are in the midst of discussions for a time frame on when combat operations can be scaled back. This despite both sides agreeing the overall war will take months. Hungary has blocked an important European aid package to Ukraine just hours after the European Union leaders agreed to start membership talks with Ukrainian officials. Hungary was the only nation out of the 27 EU members to oppose the 50 or so billion euro funding package. Hungary's Prime Minister Viktor Orban is considered the closest EU ally to Russian President Vladimir Putin. A storm is going to be forming in the Gulf of Mexico later this evening, with Florida expected to get hit hard on Saturday, with parts of the East Coast also being affected through the weekend. Coastal hazards, along with heavy rainfall and strong winds, are expected to hit as far north as Maine by Monday afternoon. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Dan Schwartzman, and this is Bloomberg.